phase, I think, for many of the companies capitalizing on this market move.
Sure. Devin, just specifically on Vodafone, if you could come in over there, I mean, all things put together, the stock actually has doubled in the last 1 year. So if someone was willing to take the risk and get in at those levels of 6-7 rupees, I mean, they're already probably feeling pretty good about it. But what from here on? Because again, if this block goes through, I mean, there are marquee names that could be getting in. A lot of mutual funds are getting in. So what's your sense? Would you buy into Vodafone purely on fundamentals at these levels?
So purely on fundamentals, I think it's a huge amount of struggle which is on as far as I think this company is concerned. On one side, they are putting up a significant amount of investment again into 4G, only to retain the existing 2G customers, migrating them into 4G, and with the hope that I think they will start giving them a better amount of realization ARPU, which is comparatively lower compared to other two in the industry. So on one side, I think that is a game. Second side, the 5G rollout has to take place. Again, it requires capital. This company would be capital hungry as far as I think their roadmap to growth is concerned. In next 3 to 5 years, we are likely to see significant amount of capital raised by this company from whichever count. Either they capitalize the creditors, the vendors, or they could probably bring in fresh money as promoters, or I think investors putting in additional amount of money, but significant amount of capitalization process will continue if this company has to come back to level at which I think the peers are. In my viewpoint, I think since they are into a good capital investment phase, I think the story would be strong. However, the performance eventually will come, but one will have to wait for the performance to come.
Okay, all right. Devin, stay on. We'll come back to you in a bit. For now, we have an exclusive story on the upcoming GST Council meeting. Sources say that the Fitment Committee has called for the proposal to cut GST on fertilizers to be rethought by the Standing Committee. What does this mean? Timsi is here with the details. Timsi, over to you.
Well, that's right. What we are given to understand from sources is that the GST Council nominated Fitment Committee has recommended that the group of ministers on rate rationalization should consider the proposal to cut GST on fertilizers and several inputs of fertilizers. In case of fertilizers, the demand from the industry is to cut rates from current 5% to 0. What we are given is that the Fitment Committee's view is that the blanket GST exemption for fertilizers, chemicals and nutrients will actually cause inversion of duty, and thus it could lead to blocking of capital for the industry. However, the Fitment Committee also said that they strongly recommend the views given by the Standing Committee on chemicals and fertilizers to reduce this tax limit, and thus a group of ministers is actually now referred to look into this matter. That is the group of ministers on rate rationalization. Let's see what happens finally when the council meets.
Okay, fair enough. So fertilizers is a space that we need to watch out for. Timsi, I believe you're also picking up that there could be some discussion over retrospective GST action in the upcoming meet.
Well, that's right. What we are given to understand from sources is that the GST Council is likely to bring an amendment in the GST rules where it says that sectors which paid GST at lower rate as against that was applied by GST authorities, they are likely to get relief from the retrospective action that the government has taken against them. GST Council may consider a proposal to not to levy higher GST rate when the lower rate was paid due to general trade practice and in absence of any clarity of the particular rate. Also, what we are given to understand that given this, the council is likely to consider not to raise such retrospective demands where industry paid lower GST rate in this absence of clarity. However, the amendment will also say that the GST law is not going to allow refund of GST or cess arising in cases where a higher GST was paid earlier and later on the authorities have actually revised it downwards. So that could be a silver lining for the industry, and yes, experts say that this could pave way for online gaming so that the government is able to say that the retrospective demands that have been raised against online gaming, which could be as high as 1 lakh crore rupees, that could actually come through this clause and this could get breather. But yes, this is what experts say. Let's see what council actually does. Back to you.
Absolutely, Timsi, and thanks for putting that on our radar as well, because yeah, I mean, every time there's some chatter about maybe some tweaks, stocks get excited. We saw that happen with the likes of Delta last week. Online gaming in specific, of course, is more relevant to Nazara because they're looking to grow that business in a big way. And if indeed there is some sort of an amendment that says there's no retrospective applicability of this 28% GST rate, it could be good news for these companies. And Delta, of course, is a different ballgame. There we're talking about a casino business, but nonetheless, the market ends up getting very excited on these prospects, given the massive outstanding GST demands. Devin, your thoughts on either of these companies, Nazara or Delta?
Not really, Surabhi. I think I haven't gone into the details in this questions.
Okay.
Okay. All right. That is on Nazara and Delta. But I wanted, your thoughts on some of the larger stocks, right? There was strong support that we got from the bank Nifty yesterday. In fact, some of the laggards like HDFC Bank, there is a narrative that, now these companies may start to outperform. Is that your base case scenario as well? And what do you do with the banking stocks? Which are your favorites now?
Indeed, actually, I think I'm completely surprised with this particular market. I think they're ignoring the quality. Some of the fundamentally strong companies, including you mentioned banks, I think you have two largest banks, SBI and HDFC Bank. Both of these banks are available at a valuation which is far more comfortable liquidity. On one side, you have got significant amount of inflow of money coming from investors. On the other side, I think these companies having a significant amount of large potential, I think they're still languishing on the valuations. So at times, I think you're confused whether the market wants quality or only wants momentum. At this point of time, the momentum is certainly not with them. I think HDFC Bank and SBI have relatively gained after 4th June fall. But the fact remains that I think the other counters in the market, they are significantly gaining the momentum. I would be one, I think, who would stay with the quality. I believe that I think the likes of SBI, which is basically growing at the current rate of growth of around 16-18% on AUM side, could probably double in 4.5 years' time as far as their AUM side is concerned. And that's where I think the size of SBI could be, I think, really meaningful going forward, even for that matter, HDFC. According to me, I think given the growth rate that we are experiencing in the economy, the banking space in particular, and I think these larger banks, HDFC, I think SBI, I think would probably have relatively much larger role to play. So one would remain invested with these companies, even though I think the return rate is slightly lower compared to the market rate of return.
Okay, all right. They've been requested to stay with us. Yesterday there were quite a few stocks that were moving with a lot of momentum. So let's get straight to our momentumizer stock of the day. Sonal joins us to run us through the one that she's picked. Sonal?
Good morning, Nigel. The stock on my momentumizer list today is Marathon Next Gen Realty, a stock that we don't talk about so often, but it has been buzzing on huge volumes. Yesterday, the stock was logged in upper circuit, up 20%. This month so far, the stock is up 62%, 18% up week to date, and up 45% year to date as well. This is when Nifty Realty is also up around 45% year to date. But volumes were around 2.5 times the average volumes, and the traded value on NSE, just look at the numbers in last couple of trading sessions. They have been increasing. Yesterday, it was 66.5 crore rupees versus the average of around 1 to 2 crore rupees on a daily basis. Promoters hold around 73% stake in the company, but there is no institutional holding in the company, so it's very important to take note of that as well. Additionally, the board will meet on 21st June to talk about fundraise. So this is one of the reasons why the stock could be in focus as well.
Okay, thanks a lot for that. Marathon Next Gen board meeting on the 21st to consider fundraise, so perhaps in focus. But let's do a quick monsoon check. Heavy rains have lashed parts of Mumbai and suburban areas, which is a good and a bad thing. SkyMet has told us that the rainfall deficit will improve by the end of June. Mahesh Plywood, the Vice President, Meteorology and Climate Change at SkyMet Weather Services, joins us now. Mr. Plywood, good morning. How is the situation right now as far as the monsoon is concerned, and what can we expect as we head into the month of July?
Good morning, and now we think that monsoon will start progressing because it has been stuck over Sikkim since May 31st, and now conditions are becoming favorable for further advancement of this monsoon across eastern parts of the country. Today, in next 48 hours, we think that it will be over eastern parts of Bihar, Jharkhand, covering Gangetic West Bengal, as well as parts of Odisha and Chhattisgarh. And rain activities will also intensify gradually over many parts of Madhya Pradesh. And Mumbai and adjoining areas may not get sufficient rain or enough rain for next 4 to 5 days, from 6 to 7 days. Then from June 24th or 25th, monsoon will start advancing from west coast of the country, like from Gujarat, southeast Rajasthan, and during that time, Mumbai may also get moderate to heavy showers. So we can say in next 1 week, the monsoon may cover more than half of the country. Yeah.
Mr. Plywood, yeah, so the delay from the West Coast side, that's a bit concerning. What's the shortfall? I mean, if you have some numbers, not just Mumbai, but overall, I mean, the progress has been quite slow along the western coast, right? Including Kerala.
Yes. Yeah, because usually whenever monsoon starts progressing, then offshore trough develops from south Gujarat to Karnataka coast, sometime up to Kerala coast, and the cyclonic circulation or low pressure area usually develops over northeast Arabian Sea. Although there is a cyclonic circulation over northeast Arabian Sea and adjoining parts of Saurashtra, but it is not strong enough to pull the monsoon currents. So we think that after, say, 4 to 5 days, the monsoon will start progressing as the offshore trough will also develop and the cyclonic circulation will be intense. So the progress will be over Gujarat region and southeast Rajasthan, covering many parts of Madhya Pradesh. And eastern parts of the country, in next 48 hours, it will start moving. And by 25th or 26th of June, we think that it will be over half of Uttar Pradesh, most of Madhya Pradesh, southeast Rajasthan, and Gujarat region. Yeah.
Okay. Do you have a number in terms of the deficit as of now? And as you're saying that it will probably cover half the region, what is the prognosis for the month of June?
Say until June 18, it was pan-India deficit was 20%, and we think that this deficit will hold for next 2 days. Thereafter, there will be gradual reduction in deficit, and by end of June, it may be at par or a deficit of around 5%. Then we think that monsoon will be more vigorous or more active in the month of July and August and September. So the monsoon deficit will gradually cover up by first half of July. And as the La Nina conditions will be developing in second half of July, because neutral conditions are on the way, and after that La Nina will be there and it will be intensifying as the monsoon progresses further. So second half of monsoon seems to be very promising.
Okay, second half of the monsoon will progress well. For now, the deficit will hold for the next 2 days and expect a rainfall deficit of 5% by the end of June. In the next 1 week, the monsoon may cover half of the country. Thanks a lot, Mr. Plywood, for joining in and giving us an update on that. Well, that's the word on the monsoon situation. Deven Choksi is still with us. Deven, many of these stocks, rural-focused names, have come back into action in a big way, right? Not just the auto guys like M&M, but across the board. In the FMCG space, I wanted your thoughts. If the monsoons progress well, are there any stocks in that basket that you like?
So the good part of, I think, most of the FMCG companies is that I think they've connected themselves very well with the tier 2, tier 3 cities and beyond. I think the distribution reach point of view, likes of HUL and even for that matter Britannia, they actually, I think, started putting across higher amount of demand prediction model from the rural spaces of respective products within their basket. So that is where probably I think one remains extremely confident that going forward, two important changes are happening. On one side, demand generation is happening from the rural segment. On the other side, these companies have corrected their manufacturing processes to meet the demand which is actual on the ground. So to a greater extent, I think it results into higher amount of profit margin for them. And given the stability of the input cost, I believe that I think most of these companies should be doing well, be it in personal care or be it in food segment. I believe that the companies are likely to do well. We continue to like the story behind Nestle. We continue to like story in HUL. And though the moderate rate of growth, but I think these companies would continue to do well along with companies like Britannia. That is what our take is in this basket.
Okay, we'll do one thing. We'll take a quick break on that note. We have about 10 minutes left for the pre-opening rates to kick in. So when we come back, we'll have the technical experts joining in, Mitesh Thakkar and Sudarshan Sukhani, to discuss a few trading strategies. Stay tuned.
cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage. And what a great way to celebrate our own 25th year, with new milestones being achieved on Dalal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC-TV18, embarking on a quarter century of excellence.
CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics.
Welcome back to Bazaar Morning Call, where we have a couple of minutes before the pre-opening rates kick in. So let's get Mitesh Thakkar and Sudarshan Sukhani on board. Gentlemen, morning to both of you. Sudarshan, I want to start with you first. It's been a phenomenal ride for this market, climbing every wall of worry. But now, do you think the gains are getting a bit heady for the market? Do you think some consolidation is the need of the hour? And what's the best strategy for today?
Yeah, good morning. Well, some consolidation will come soon enough, but we can't time it. We cannot say when it will come. Until then, the markets are in a very clear and visible uptrend. We are making lifetime new highs. We go into a consolidation and break out from that consolidation. So the trader, the short-term trader, has only one trade: stay long and look for opportunities to add to your long positions. The Bank Nifty is much more interesting for the day. You know, there was a 5-day trading range, and yesterday it broke out above that range in quite a style. So the Bank Nifty is also a buying opportunity, rather more of a buying opportunity. Keep a stop under 50,200. Look to buy the Bank Nifty. Keep a stop under 23,400. Buy the Nifty on dips. Expect a consolidation, but till then, be long.
Okay, thanks for that, Sudarshan. Mitesh joins in as well. Hi, Mitesh. Good morning. How do you trade the index?
Morning, Nigel. So I think, one, we've been trading with long bias. Two, I think yesterday also I mentioned about the Bank Nifty and the financial stocks. So Sudarshan was just highlighting that. I think the banking names as well as your housing finance companies, etc. I think they are showing very good patterns in the short-term chart. So that's where the momentum could be. And therefore, I would agree with Sudarshan. I think the focus should be on the Bank Nifty. Looking at a test of 50,750 there, and in a good case scenario, 51,100 for the Bank Nifty, and then we'll take it from there once we reach those levels. And on the Nifty, I have now revised my upside target to about 23,950. Let's see how it goes. But for the timing, the trend is on the upside, so we'll keep looking at higher levels.
23,950, huh, Mitesh? So inching closer to the next milestone, I guess. That's been the journey of this market. Good morning, gentlemen. So let's get down to stock ideas as well. So Darshan, what are the names that you'll work with today?
Since we are buying the Nifty and the Bank Nifty, the names really are, apart from that. We consider buying BPCL with a stop under 583. The large cap that I have is Reliance, which has been underperforming. Expect a catch-up. Buy Reliance with a stop under 2836. Adani Enterprises is a buy with a stop under 3045. And yesterday, IDFC First Bank had a big breakout. That tells us that the stock is probably ready for an up move. Buy with a stop under 77.
Okay, those are Sudarshan's stock ideas. Mitesh, your list?
So from the banking name, I've picked up a Bandhan Bank today. Keep a stop at 193. Look for targets of 210. That apart from the mid-cap space, the fertilizer names had good breakouts. So we have had buys on Jumble earlier. Now I would recommend a fresh buy with a stop at 429 for targets of 460. A buy on GNFC with a stop below 689 for targets of 730. And after a long time, one sell call, that's Ipca Labs, some corrective pattern over here. So sell here with a stop at 1183 for a target of 1120.
Okay, all right. I think, thanks a lot for that, Madesh. I think that one of those blocks I've got out of the way, the Sansera block, I think now it's almost done. Strategic investor looking to sell closer on 11% stake in the company. That should come up for you on the screen as well. For the time being, we'll slip into a short break. You come back, we'll get you the pre-open rates. We'll also get chatting on the defense sector. Stay with us.
Of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube.
These are businesses that have a great market position. In many cases are leaders in what they do. Some have been playing in smaller niches and
Welcome back. Well, in a short while from now, we'll be getting the pre-open rates, and it promises to be a rather good start. The block that we were talking about has been done in the block deal window. 57 lakh shares on Sansera getting changed. Total value of around 690 crore rupees. Well, let's get in some derivative strategies then. I think we have Rajesh Palvia, the VP Technical and Derivative Research, who joins us. Hi, Rajesh. Good morning. Always good to see you in. What are the strategies you have for us, both on the index as well as on individual stocks?
Good morning, Nigel. So there is no stopping for the Nifty. We are continuously making new all-time high for the Nifty. Looking at the momentum, the put writers are riding on 23,400, 23,500 strikes. That clearly showing that base is now shifting higher. So we believe that this momentum can extend further, and possible rally can extend towards 23,700 to 23,800 also. Looking at the call writers, they have shifted the position at 23,700 to 23,800 strikes. So that clearly shows that this momentum can extend further higher. So to play this up move, we are initiating here to buy call option of 23,600 strike, which was closed at around 65 rupees. We are projecting target towards 130 to 140 for this call option. Your stop loss should be placed at around 30 rupees. Looking at the Bank Nifty structure, a very strong breakout has taken place in previous day. 50,200, that was the major call concentration wall, and now we are trading above to 50,200 mark. So looking at the short covering in previous day, we believe that furthermore follow-up buying action could trigger in the Bank Nifty as we have a weekly option expiry also. So short covering may trigger again, and then possible rally can extend to 50,800 for Bank Nifty in continuation of this up move. Here also one should remain on the long side of trade. Your stop loss should be placed at 50,100 to hold long position in Bank Nifty also. On the stocks front, we believe that auto ancillary may do well Exide Industry is looking bullish. The way stock is enjoying its all-time high trajectory, long built-up was there in derivative data. We expect that Exide Industry can continue furthermore upside. A possible target we can see towards 585 to 590. One can buy with stop loss of 555. The second stock that we like is from pharma space, that is Cipla. Stock again, registered its new all-time high. The way stock is making a higher top, higher bottom formation, there is a continuity of uptrend. We expect that Cipla may also exhibit good amount of rally from here onward. 1630 is the near-term to short-term target for Cipla. Keep your stop loss at around 1555. And the third stock is from housing finance company, that is Canfin Home. Very strong breakout on long-term chart, almost 12 to 13 month consolidation range breakout on the monthly chart. So that clearly shows that this stock may perform well in a positional perspective also. For trading point of view, 920 to 930 could be the possible target. Your stop loss should be placed at around 875.
Okay. Rajesh, thank you for joining in. Appreciate your time. Well, let's just get the pre-opening rates in. They're still coming in, so we'll wait by for a bit. But for now, it looks like 23,600 will hold on the Nifty. The Sensex is well up about 120 odd points. And lots of big movers. M&M is your big gainer this morning, once again, 1.5% higher. Tech Mahindra, Hero MotoCorp, L&T, SBI Life, Tata Motors are a couple of movers. But in the last couple of days, the defense sector has come back with a bang. Yesterday, names like Hindustan Aeronautics, Mazgaon Dock, Paras Defence, Cochin Shipyard surged 6 to 20%. With respect to HAL, the government has called for proposals for supply of 156 light combat helicopters. Will the rally in defence stocks continue amidst policy continuity? Amit Anwani, the research analyst at Prabhudas Lilladher, joins in now. Amit, hi, good morning. There is a big FOMO feeling amongst retail investors who missed out on the defence rally. What is your advice to them? Is it still a good time to be buying into these names? And if yes, what are your top picks now?
Right. Thanks, Sonia. So definitely we have seen a massive rally in defense stocks, and this is all building up on whatever policy framework which has been set and the intent of the government. So one major event which was pending, whether the government and the policies will continue, that is over now. So now we can see, even in case of HL, as you highlighted, 156 LCH, and we saw 2 months back 97 LCA order also came in. So how I take it in very different ways. So I think the defense should be looked up in terms of at least 5 to 7 years of revenue built up, which can happen because of all the very massive and strong order book built up which is happening. So I think that will continue to roll for many companies, at least 13, 14 years of CAGR in next 5 to 7 years. And specific to HAL, which is also one of our top pick as well. Definitely with these orders, I can see the manufacturing revenue scaling up from current 7,000-8,000 to in next 5 years to 35,000. Yeah.
Okay, all right. Amit, just hold on to that thought. We're talking about large trades that have taken place. Sansera has gone out of the way. And Piramal in the block window, that one as well, there's close to 4 to 5% equity that's actually changed hands at around 900 rupees. So I think Piramal Enterprises, that's come actually another one. We were expecting 4 large trades. And now, in fact, in the block window, there is Piramal Enterprises as well that's taken place. So just keep an eye out on that one. Well, Amit, you've been positive on these names. I think HAL as well as BEL. The problem now is someone who wants to enter fresh, could they do it at current levels with that horizon of around 5 to 7 years? Or would you say those who are already riding it, well, you continue to hold on to the position? But a fresh take, fresh entry is a little bit tricky. Your take?
Right. So, Nigel, I think, as I said, we can continue to hold for a longer term, and definitely we can enter at corrections. So my hypothesis is that even if we consider 8% growth in defense budget, which was about 1,70,000, there would be at least 14 to 15 lakh crores of capex, which is going to happen in defense cumulatively over the next 5 to 6 years. And we are talking about at least 70-75% domestic procurement, which should be about 10 lakh crores, right? So the HL itself is talking about at least 2,50,000 crore pipeline. So at least 25% of what is going to ordered out would be for HL, and that would be replacing all the aircraft replacement requirement we have, helicopter replacement requirement we have. And with this helicopter order which came to them, which is about 156 numbers and 45,000, there are also large orders pending in helicopters, at least 350 numbers of helicopters order in addition to 150 should come in next 3 years, because we are at a massive replacement in Army, Navy for helicopters as well. We are looking for that. So I think the pipeline is massive. Company itself is talking about at least 8 years of revenue visibility, strong revenue visibility, and with further orders coming in, I think the revenue visibility will extend to, let's say, 12 to 15 years for HAL.
Okay, so that is on HAL. Apart from that, where do you see both valuation as well as growth headroom in other stocks? I mean, where do you see maximum potential now? Because, you know, valuation seem to be the big concern at the moment.
Right. So, Sonia, as I said, I think valuations are at about 40 to 43x for many companies in defense, and this has scaled up from, 15, 20x for the shipbuilding companies, and even HL was at about 25x 1 year back, or maybe 9 months back. So definitely, if we see 2 year forward, the valuation appears very expensive. But the major delivery schedules for the defense companies will start FY27 and built up till FY31. So I think the growth beyond FY27 will appear higher in terms of CAGR. So if you ask me today, of course, seeing the multiples, I can't see any comforting name. But as I said, one has to make a long-term view. We can definitely add corrections in the names which are highlighted, and defense for next 5 years will see massive ordering. Yeah.
Okay. One company that you're bullish on is BHEL. You, in your report, you do talk about how the prospects are very strong because they are expanding their capacities across the board, right? Whether it's in defense system integrations, whether it's in missiles, MROs, etc. What kind of upside do you see on the stock, and what kind of earnings, growth are you looking at?
They're talking about Bharat Electronics, right?
Yes. Bharat Electronics, sorry,
Yes. So see, Bharat Electronics, we have been talking about at least, so this year they're positively surprised with 35,000 crore order intake versus 20,000 crore guidance. The company is talking about 50,000 crore cumulative intake for next 24 months. So at least 15% top line CAGR. I think we have an estimate of about 7.4 kind of EPS for FY26. So definitely, if you see, as I explained, if I'm expecting 10 lakh crores worth of capex coming to domestic companies over the next 5 to 6 years, the defense electronics varies between 5 to 15% in each order. So just to give a macro view, definitely there'll be proxy beneficiary of all the orders happening in either the Navy, aircraft, helicopter, or even the missile side. So definitely with that aspect, and even duration is also short compared to the other companies.
Yeah. Amit, just sort of quickly to wrap this up. So you have a hold on Bharat Electronics. I think you have a hold on HAL as well. Just to wrap this up, if I talk about FY26 earnings, let's not look at 25. 26 earnings, forward earnings. What is the most expensive defense stock, and what is the least expensive defense stock? And is there anyone that you would that you have a buy recommendation on?
We used to have a buy recommendation, but the pace at which the prices are going up, so the things have been hold. So with respect to, I think I can't see in the large frontline names, for example, HLBL already at 42, 43x, MDL already, I think 40x if I see the numbers. So I think there are few counters like BDL, almost maybe slightly lesser than these frontline names. And but I think even the private companies like Data Patterns, Astra, I think everyone has gone to that 40x multiple. So broadly speaking, I can't find any good name which is trading below 35, 30x in defense right now.
I guess that's the kind of market we are in, right? Where defense stocks and FMCG stocks almost are trading at equal valuations. It's just the market cycle that we're in the midst of. Thank you very much. Good having this chat with you, Amit. You have a good day. Well, let's go back to our technical experts for some final trading ideas before we hit open. Sudarshan, what would be your 9-10 call?
Well, Adani Enterprises is a buy with a stop under 3,045.
And Mitesh?
I'll go with a buy on Bandhan Bank for targets of 2 and 3.
Okay, well, let's also get a quick handle on some of the jewelry companies and why they should be on your radar. By the way, the pre-opening rates have settled now about 70 points higher. So it looks like the record highs are going to continue. But Mangalam is here to tell us more about jewelry companies. Mangalam, over to you.
Well, the jewelry companies will definitely add sparkle to those record highs, and that's because there is a strong accelerated trend of formalization in the jewelry industry. And today we have a note coming in from Motilal Oswal as well, where they said that the organized jewelry market is close to 36 to 38% of the industry, and this number was just about 22% in FY19. From FY19 to FY24, a 5-year CAGR tells you that while the total jewelry market grew at around 8%, the organized players actually grew at 18 to 19%. And in that as well, the top 3 players, we have Titan, Senco and Kalyan, grew upwards of 20%, and that is why they gained market share, and which is why Motilal Oswal is optimistic about this category as they anticipate rapid shifts in consumer purchase behavior. And a lot of the players are actually backing the franchise model for growth, and franchise model is not only asset light, it also enables faster reach. So all those factors working for them. They've initiated coverage on Kalyan Jewellers and Senco Gold with a buy rating. The target that they have for Kalyan Jewellers is 525 rupees, valuing it at 45 times. We have Senco Gold valued at 35 times, the target of 1300, and they reiterate their buy on the leader, that's Titan, with a target of 4150, and the multiple that they ascribe to Titan is 65 times. The only couple of risks that they highlight, one would be massive volatility in gold prices, and secondly, because of intense competition, there may be pricing pressure on making charges which are margin accretive for a lot of these players. So if you take note of these risks, then these are the calls that they have in the jewelry space.
Okay, all right, got it, Mangalam. Thank you very much. So we'll watch out for all those jeweler stocks. Just about 3 minutes to go. Let's quickly go across to Hormaz for a recap of the big blocks that we're watching out for today. Hormaz?
It's been a trend, right? The MNC companies, promoters, all of them trying to rake in the moolah in the Indian entities. You've seen that in ITC, and now we are seeing in 3 other companies as well. Indus Towers, the block deals are taking place slowly as we speak. The plan initially was to sell 9.9% stake from the Vodafone Group. They upsized it to 18% earlier this morning. The deal is now set to be worth $1.8 billion, and as of March, the Vodafone Group held a 21% stake in Indus Towers. So that is the block deal that we need to watch out for today. The other one is in ZF Commercial Vehicles, where Vapco Asia is planning a 5% stake sale, which is valued at close to 1,400 crore rupees. And as of March, they held a 75% stake, so they were compliant there. So another 5% that they plan on selling. The last one is in Gland Pharma. We've seen a few stake sales earlier as well from Fosun, and here we are seeing another 5% worth around $170 million that is likely to take place in Gland Pharma in today's session. And as of the March quarter, Fosun held around 57% stake in the company. So if the 5% here is sold, that will fall to 52%. So this MNC stake sale trend continues, as has been the case throughout the year. We'll keep an eye out on all of these names as well.
Okay, thanks a lot for that. I just also wanted to draw your attention to Tata Motors. That stock will definitely be in focus this morning. Now, the company released a presentation this morning. There was an investor day by Jaguar Land Rover. Now, there is no change to their FY25, FY26 guidance. That is pretty much known by the street. But what is new is the company has released a new long-term vision for the company. And in that, they say that their long-term vision is to achieve a 15% EBIT margin for Jaguar Land Rover. So that is something that the street will definitely take positively. The FY25-26 guidance is known by the street and has been digested. But the long-term vision and the positive commentary there is something that, the street will take well. But Mitesh, I wanted your thoughts on Tata Motors. It's been very strong, but right now it's just consolidating around this 990 to 1,000 rupee mark. Do you think that there could be a leg up to the stock in the near future?
See, I think there could be, but what I'm waiting for is the important hurdle to be cleared. Now, on the 13th of May, the stock had gapped down by about 20 points, and that gap is in range of about 1,030 to about 1,010. And last rally had, kind of failed to get past that. So I think once we capture 1,030, the stock would give a 10-12% move easily on the upside. But I would want to buy once this gap is filled.
Okay, we just have about 30 seconds left for the markets to open, so we'll wait by for that. Remember, it's the fourth day of record highs that the market has seen yesterday, and in all likelihood, the Nifty will hold above the 23,500 mark today as well. Looks like it's going to be a really strong opening, 72 points higher. It's been relentless, the run over there. I'm looking squarely at the Bank Nifty because yesterday, all the focus was there. The Nifty Bank ended over 400 points higher yesterday. It's cruising above that 50,000 mark. So is that going to be the leadership pocket of the market? Is there going to be a lot of delivery buying there? That's the big question that we're asking this morning as well. Also, both FIs and DIs bought in the cash markets and large buying at that. There are some large block deals that are taking place as well. So there's a lot of action in the markets lined up this morning. So let's wait by for the opening bell. That's the first tick that you're seeing on the screen. Good going, 30 points higher on the Nifty, 100 points higher on the Sensex. The mid-cap index is up about 100 points as well. The Bank Nifty is holding on to the 50,500 mark with a bit of ease. But there is no big bang opening. It's just consolidating with a bit of a positive bias right now. So 25 points higher on the Nifty. Decent morning opening, holding on to its gains from yesterday. What are the top gainers? Power Grid, Tata Steel, Tata Motors, ICICI Bank are topping the charts this morning. You have IndusInd Bank as well, that's up about 0.5%. And technology stocks are coming back. So, Nvidia is the big global story, of course. But back home as well, Infosys, Tech Mahindra, all of these stocks are up in the green, up anywhere between 0.5% or so. ITC, Reliance are a couple of other heavyweights that are holding forth this morning. Now the market is flattening out a little bit, about 20 points higher, so just hanging on to its gains from yesterday. What's dragging the market is Hero MotoCorp is down 1%, Titan is down 1%, Shriram Finance, Grasim, M&M, Bajaj Finserv are a couple of other names that are trending in the red right now. Axis Bank is another one, Bajaj Finance and Finserv, as I said, Divi's Labs also just trending a tad bit in the red. But either way, it's nothing alarming. It's just flat terrain for the market. Let's see how the rest of the day shapes up. We don't have any, global cues as well. The US markets are shut. But this is once again fresh record highs that we're seeing in the market and not looking bad at all.
Well, that's right. So when I just take a look at the broader markets, though, Paras Defense, the first minute of trade, it's up 10%. The stock is up more than 60% in this month itself. So that continues its northward direction, up 10% as we speak. Azad Engineering, that's the other one that's locked with a gain of closer around 5%. So both these two have been doing well. They continue their upward trajectory. Lurch Avenues Tech, I think that's the new kid on the block. Well, that stock is up and about in today's trading session. It's seeing follow-through buying up more than 10%, 15% now as we speak. So big up move is what we're seeing out there. RCF, I think there's a bit of an uptake on ammonia prices, and there is hope there'll be some rationalization, or there'll be some, a kind of breathing space on GST. So that stock is up close to around 8%. I recall a month or so ago, we had highlighted here in our morning chat that one was moving quite well, breaking some technical levels and also good delivery-based buying at around 155 rupees. Or today, the stock is up close to around 8%. Two stocks that are reacting to large trades. You have Sansera. That stock is up close to around 5% post the last trade. And Windsor Machines, small stock, we normally don't talk about it too much. But 85 crores of block was changed today in pre-open. So that one as well, Windsor is up close to around 8% odd. Nandan Denim, another stock that's up close to around 5% as we speak. So keep an eye out on that one. And on the flip side, you have Shoba that opened with a cut of close to around 3%. So that stock comes up for you. And Gland Pharma, as we saw, that block just took place. So that one as well under some pressure.
Okay, lots and lots of blocks. All those blocks on the Gland, on Indus Towers, all of them have been sort of in the process of getting executed. Different deals taking place. Even on Ixigo, that 13% up move, there was a block in right up in the morning itself. So blocks are really keeping the market buzzing. The other area is fertilizers. So it's sort of a double bonanza. Monsoons are moving forward. And the fact is that there is this chatter about perhaps a GST rate cut as well on fertilizers. All of them. That's the sector of the day, really. Look at FACT, look at Chambal Fertilizer, RCF, GSFC, NFL. Pick any fertilizer stock and you'll get gains between 5% to double digits, almost 10% in some cases. Some of the names on the defense side continue to look good. Dredging. By the way, there are lots of blocks on a lot of defense companies, Paras included. Paras has been extremely active last couple of sessions. Again, this morning, we've seen blocks on that counter. So defense is a very, very active theme. Fertilizer is looking extremely good. Beyond that, let's see what else stands out. In terms of the top volume charts, Zomato is having a good morning, 2.5% up on Zomato. Then we have a couple of PSU banks, which are not too bad. Look at Union Bank, Bank of India. some of these names on the upside, even a J&K Bank. So there's some buying on the PSU banking side. The Nifty on the whole has stabilized. It's not a flying start, just about a 30-point up move, but it's not bad. By the way, Titan isn't reacting to the Motilal Oswal price target. I'm not sure how much they increased their target price by. They're always very positive on Titan. But anyway, that stock's under pressure, 1.5% on the lower side. A lot of auto stocks are seeing a cool off after the recent rally. So Hero Moto, Bajaj Auto, even M&M. These are the names where there's some profit taking that's away. By the way, of course, look at metals, because Manisha was alerting us about this, that metals, overnight there's been a rally in prices. That's showing up on the stock side as well. JSW Steel, Tata Steel, these are the top winners on the Nifty right now.
I just also wanted to mention two more stocks. Varun Beverages is one of them. It's at a fresh high this morning and the stock is up almost 3%. So just pull that up. CLSA, in fact, has, look at that, 2.5% higher. CLSA has raised their target price on Varun Beverages to 1977, which is a big upside to the current market price. And they have raised their target multiples from 48 times to 59 times. So big up move on Varun Beverages. Of course, we've spoken about that earlier. But CLSA talks about increased affordability and new territories and products to sustain growth. And the other one is DMart. Continues to be in the news. Fresh highs over there on DMart. Just pull that stock up for you. Avenue Supermarts now at 5,100. So some of these consumer names are looking pretty good. Volumes are also picking up on them.
Sonia, just pointing out, the mid-cap index has slipped. It's in the negative. Yes. So today is a day where it's not all flourish. There is some caution and there is some consolidation, and maybe that's exactly what the doctor would have ordered as well. Broader markets a little quiet. Let's see, about a 50-point dip on the mid-cap screen. Advanced decline ratio is still positive. It's very early in the morning, so we'll have to see how this plays out. Actually, even on the Nifty, thank the banks today. If it wasn't for the banks, the Nifty would be in negative territory. It's about 15 points higher. The bank Nifty is the one that's still trying to keep the cheer going. IndusInd, ICICI, these are the names on the upside. And technology, like Sonia mentioned. So some gains, and they are very not very big gains. We're just talking about 0.5%, 0.25% kind of gains on these stocks. But yeah, a little tricky. Let's see how this plays out. A little quiet on the screen as of this moment.
Well, that's right. But the fertilizer stocks that you were talking about, just take a look at that. That's the sector of the morning, actually. RCF up 11% now as we speak. So they've opened up, gap up, but they're building onto the gain. Chambal Fertilizer 7.5%. Fact is up. NFL, that's another stock out there. You have a couple of other names as well, like GSFC. Some of these stocks actually opened up a little bit flattish to the mild positive bias. But these stocks, now they're flying away as we speak. And big up move is what we're seeing on a lot of those names. Well, the Indus Star stock is still down close to around 2.5%. Also keep an eye out on that one. Some very small part, I think, of the block got done. We'll have to wait for further clarity. But the sector of the morning, in terms of the reason why the Nifty is up right now, is because of the Nifty Bank. That's moving to a fresh all-time high. And building on yesterday's 450-point rally, it's up another 350 points. So that's clearly the big heavyweight in there that's batting for the Bulls.
Oh, absolutely. And that's the one that's keeping things up. Well, the market opening is before us. A little bit of a wobble, but looks like it's okay. Bulls still in control. Manish Santhalia of MK Investment Managers is our market master on the show today. Manish, great to have you on. The market's gone through a lot, but bulls have still retained their firm grip, right? What do you make of things and the manner in which liquidity is coming in? FPI buying has picked up, which is why we're seeing banks finally turn green as well. What do you make of the overall structure and the construct of the market post-elections now?
Yeah, so roller coaster ride post-elections, election verdict on the exit polls and then the actual verdict. So the pendulum has swung from greed to fear to greed to now FOMO is what I reckon. A lot of buying happening post-election results. We've seen the SIP flows. So I think it's a fear of missing out, playing out in the market. Those who wanted to buy are getting into the market. Overall, I think the direction remains positive. Only thing to watch out for is that for the next 6 months point of view on a fundamental valuation basis, the Nifty 50 looks to traject another 5 to 6% or 5 to 7% at this for the next 6 months. So the main action is going to be in certain sectors, the broader markets as a whole. I'm not talking about the extreme small caps or the micro caps, but yeah, the mid caps and the largest mid caps or relatively, decent market cap mid caps are the areas where the action was likely to be. I think direction remains positive. There's nothing to really call out that, things are getting excessive on the overall market as a whole. But yeah, I mean, the thing to watch out for would clearly be the budget and if there are negative surprises.
Okay, Manish, I'll come back to our markets, but I wanted your thoughts on what's happening with Nvidia and, all the big tech stocks globally, right? I mean, all Indian investors are wondering how they can participate in the rally there, not just with Nvidia, which of course has played out. There are so many other companies, whether it's, some of the big tech companies, where it's something like an Applied Materials, which is, of course, in the semiconductor space, that's rising as well. Now, for an Indian investor who's looking to put money to work, there are many mutual funds that have exposure to these global names. Do you think that's the best way to approach it, or do you think that story has played out already in big tech?
I think the only way Indians can get exposure to overseas market is through LRS or through mutual funds where they're already invested, because I believe limits are almost full for overseas investments in most of the mutual funds. So that's the only way to invest and in overseas through the LRS, through individual, names, individual files where you could invest $250,000 per person. That is the only way out. As far as the overall IT space is concerned, I read that there's a lot of divergence. Few of the large caps are the areas where there's a lot of buying or bullishness, but the rest of the market is actually falling behind in terms of the NASDAQ construct as we read. Not too much of an idea about what is happening out there, but yeah, clearly, Nvidia is off the charts. It's clearly flying away to glory, so to speak. So, and of course, that's going to have a repercussion, globally as well in terms of tie-ups which this company has all over the globe, including India. So, overall, I would say that in terms of the IT space, we would reckon that, the second half of this year or the first half of next year, clearly there should be some sort of pickup in the IT space in India.
Hi Manish, good morning and good to see you. And when Nvidia, what it used to make it an entire year, now in a single quarter, it's making twice of that. That's the kind of financials as well that have been coming up, and the stock has moved just one way. I wanted to ask you, Manish, about the telecom space. That's suddenly come back. For those that applied in the rights issue, they're quite happy with regard to Vodafone Idea. But how do you approach this theme? We have a tariff hike that's in the works, and all probability the next couple of months we should hear about that. So that's a tailwind for the entire sector. But how do you play it?
Yeah, so tariff hike, is getting priced in for the all the three names that you have, the leading ones. And obviously a lot more has to happen in terms of, getting Vodafone Idea to justify the fundamentals. A lot of legal cases where the dues are there should either be having some sort of a moratorium going into future number of years or some sort of a waiver. A lot of positive announcements or judgments that should come in their favor to justify 10 times EV to EBITDA 2 years out. Because, and plus now they're actually, converting a lot of their operational creditors dues into equity. So I think, tariff hikes clearly is the need of the hour. We have had it too good for too long. It's around the corner, and all the three players must, act in sync. That's going to be the one monitorable. And then it is about the dues that need to be paid. Clearly, the third player will have to have a lot of positive announcements in this regard to justify fundamental valuations. But mind you, telecom is some sort of a utility sector. We can't really be having a 15 times EV to EBITDA 2 years out in terms of valuation. I don't think those sort of valuations do sustain. But anything like 10 times EV to EBITDA on a FY26 numbers, you'll have some reasonable upside even from these levels.
Okay. By the way, checking Zomato, stock's extremely active. Good volumes, 2.5% higher. Yesterday, Zomato also officially released to the exchanges that it is indeed in talks with Paytm for their entertainment business, the going out business, as Zomato calls it. And of course, the stock's now racing towards the 200 mark. Give us some ideas. I don't know. You won't talk stocks, Manish, but some thoughts. We were speaking to a defense analyst just a while back, and the grouse there was that valuations are so high. He likes a lot of businesses, but he has hold calls. He says, I can't issue a buy call looking at the valuations. And on the other side, you have a lot of these, consumer-centric, newer age businesses that have actually turned around very well. We're seeing some of the jewelry stocks react quite well to some buy notes this morning as well. Just some thoughts on where one should be looking in this market beyond the obvious.
So one sector which, to my mind, will gather some attention is the housing space. Not yet fully priced in, but anything that goes into the housing part of thing, because it is the roti, kapda, and makan. The roti, kapda has been taken care of. The makan is now the focus of attention. PMAY has announced 3 crore new houses. The sector has seen some sort of a consolidation in the second half of last year. And I think a lot needs to be done for the middle class, the lower middle class, and the rural folk. In that space, I think anything to do with housing, whether it be building materials, housing finance, home improvement, real estate in any case is firing through but I'm not talking about actual real estate, but housing, ghar. For the masses. That is one area which is not yet priced to perfection. And, there's a lot of upside, assuming that. And my sense is if this sort of programs are taken by the government, you have, some sort of leeway given in the taxation part of things catering to housing even now, then you could see 20-25% sort of a growth. And in that regard, he's still trading at less than 1 PEG. Most of the decent names, so to speak. So this is one area which I think has not yet seen the attention of the market. And of course, in the budget, the thing to watch out for would be how much of the money is left in the hands of the average household. So consumer durables, and consumption and consumer discretionary side of things, whether it be your two-wheelers or whether it be your health, pharma, and all of these things will see some sort of, extra attention than what these sectors have got so far.
Okay, well, there's a sudden slide in the mid-cap index, by the way, almost 500 points gone in the last 10 minutes or so. It's a 1% knockdown in the mid-cap index. So I don't know what's led to that, but there is definitely some volatility that's kicking in. The advanced decline ratio as well has just turned in favor of the declines, almost 1430 stocks over there. And if you're looking at the mid-cap end of trade, then there are plenty of stocks, that are seeing a bit of a crack. Some of these vulnerable names, but even defense names, BEL is down about 3% right now. BHEL is down about 2%. IRB Infra is down. IEX, NBCC, IRFC. So all your big gainers are now coming in for some profit taking. Manish, before we let you go, this rally has largely been led by large caps, but there's been participation from the broader end as well. Now, are you getting a bit uncomfortable about the broader market up moves, the valuation discomfort? And do you think the more prudent idea would be to stick to large caps over mid caps?
No, so on the contrary, I think the large cap, the Nifty 50, would have very full valuations once we approach closer to 25,000 levels on the Nifty. And that is just about a 5 to 7% up move from these levels. Having said that, certain sectors within the Nifty 50, which would see, and assuming that we are seeing FY25 clocking 15% earnings growth, which would be driven by BFSI, oil and gas, metals, and IT. These are the spaces where you will have cushion. Capital goods are priced to perfection. There is a lot of growth, but it's all priced in. They would see some sort of consolidation. Same goes with defense, cable companies, power equipment companies. I mean, all of that, it will see growth in terms of numbers, but these valuations are prohibitive. On the contrary, the broader markets, which is basically the mid-cap space, I'm not talking about the small-cap space or the micro-cap space, but the mid-cap space, there's a lot to pick and choose within sectors. And it's not about the index per se. Certain pockets of the mid-cap index also are priced to perfection or even excessive, but there are a lot of opportunities within the broader markets in terms of sectors and picks. So this is one space which will remain, in terms of your stock picking, a lucrative area to look at. But that's how I would put it. I don't think it is large caps over mid caps. It is going to be mid caps over large caps, at least from the next 6-9 6 months point of view. And of course, we'll have the budget to reckon in between, and then we'll take it up from there, how the things look like 1 month from.
Okay. All right. Thank you, Manish, for joining in and speaking to us. One theme that Manish spoke about was the housing finance sector, which has been in focus after the government's push for affordable housing. So we'll talk about that. But before that, as I was saying, there is a lot of volatility in the broader markets. There's a sharp fall over there, especially in some of the defense stocks. So Hindustan Aeronautics, BEL, BHEL, that whole lot. Suzlon is down 1.5%. Indus Towers, by the way, is down 6%. So there's definitely some trepidation there. But getting back to the big theme of the day, which is housing finance, the cabinet has expanded the rural housing scheme. Additional 3 crore houses will receive assistance under the scheme. To discuss more on this cabinet decision and its impact on the housing finance companies, we're joined by Tribhuvan Adhikari, who's the MD and CEO of LIC Housing Finance. Mr. Adhikari, congratulations on the company's Founders Day, and thank you so much for joining us, on CNBC TV18. I wanted to start by asking you about your view on the affordable housing boost that has been announced by the government. Last time, how much did you receive from the government under the PMAY scheme, and how much had you asked for, and what, according to you, is the outlook now in terms of growth?
Well, as regards the announcement by the government, the scheme is still on the drawing board, not yet finalized. We've not received the finalized scheme as yet. We've been having a series of meetings with the ministry and the NHB, National Housing Bank. So expected that very shortly, probably in a month's time, the scheme will be on board. Yeah, as per the basic contours of the scheme, I think it's going to be more or less like the earlier PMAY, the Pradhan Mantri Awas Yojana, what we had. Well, in the earlier schemes from 2015 to 22, we had disbursed about 42,000 crores under the PMAY scheme, and it was quite a successful scheme, and we managed to reach out to a large number of people. I'm pretty optimistic about the new scheme also. I think it's going to give a big boost to the much needed affordable housing demand. There is a lot of demand in this sector. Unfortunately, the supply has been slightly on the shorter side. And I think it moves closer to the government's vision for housing for all. And it will have a multiplier effect, because housing is a sector which is labor intensive, leads to creation of jobs. Approximately 250 ancillary industries associated with the housing sector. So overall, I think it will be a big boost to the economy. It will give a big boost to the economy.
So, sir, just to clarify, you said 42,000 crores, right, was the amount that you received?
Yeah, that we had disbursed under the earlier PMAY schemes.
Okay, and how much had you asked for from the government?
Well, I think we had asked for 45. We got 42 and disbursed 40.
Okay, so what is the disbursement target that you have for FY25, FY26?
Yeah, we are looking at disbursing 75,000 crores of housing loans this year.
Mr. Adhikari, hi, morning. This target of 75,000 crores in disbursement, you're not factoring in the next round of PMAY in this, or are you? Because it's again a very ambitious plan, 3 crore houses.
Yes, but this is for the entire housing finance industry. Now let's see what is the share. What is the share of the finance that we get? Because it ultimately depends on that. We have in our discussions with the ministry and the NHB, we have said that approximately 25 to 35,000 units. We are in a position to disburse 25 to 35,000 units of PMAY loans in the current financial year. So that would all depend on what is the allocation to us. But being the largest housing finance company, I'm optimistic that we'll get a big share.
No, absolutely. Just to complete the point, what was your share of the previous version of PMAY? I mean, how much out of the total disbursement came to you?
Well, I don't have the exact figures. I think about our share would have been about in the region of 20%.
20%. And then again, coming back to that number of 75,000 crores of disbursements for FY25, right now that's just the regular business. You've not factored in the PMAY. So could this number be higher? Could your disbursements cross, say, 1 lakh crore if the PMAY next round also starts happening in the next couple of months?
Well, to clarify this, I think, as I said, PMAY has not been fully factored in because I do not know what is the sort of assistance I'm going to get. I'm going to get. But we have factored in about 5 to 7,000 crores of PMOI into the 75,000.
All right. Hi, good morning, Mr. Adhikari, and congratulations on the company's Founders Day as well. So wishing you and the entire team well. Well, let's get a couple of numbers out of the way then. The rundown in your book is quite high, and you're guiding for disbursements of around 75,000 crores, which most analysts are working with as well. What about the AUM growth? What can we work with for FY25, FY26? Some on the street are expecting a number between 8 to around 10%. Is that doable?
Yeah. Yes, we are looking at a double-digit growth in the current financial year. Last year, we had some challenges initially, but those challenges have been overcome, and I'm I'm optimistic about a double-digit growth in AUM.
Double-digit will be around 10%?
Yeah, 10 to 12%.
Got it. All right, 10 to 12%. What about the NIM guidance? I'm reading a note which says that, you're gaining because of the floating rates. 50% of your liabilities are fixed. So what could the NIMs look like going ahead from here on, if you could give us the guidance?
Well, last year we ended with a NIM of 3.09%. We expect this to moderate a little bit this year, but not too much. Our guidance is between 2.7 to 2.9.
Okay. So I'll come back to your business in a bit, but before that, I also wanted your thoughts on the upcoming budget. There's, in the month of July. Affordable housing is a big space that the government has already given a push to. But from the budget, is there anything that you would be expecting for this sector?
Yes, definitely. The outlay, I believe, what was announced in the interim budget was more 24,000 crores for urban housing. Well, let's see. From what we're getting to hear, the budget may, the government may hike this figure, because this is as I said, it is a sector which gives a boost to the entire economy as a whole job addition to job building, and then the various other industries associated. So the basic feedback we're getting is probably the government could go a little bit higher than 24,000 crores, but let's see what comes up. Ultimately, it would depend on what is announced in the budget.
Okay, so what would, sort of make the street happy? Around 25,000 crores has been the ask, and anything apart from the overall budget outlay, the number, anything else that you would expect for the sector?
Well, we have been talking about a few things. We are in our discussions with the ministry and the NHB. We have been talking of some tax breaks, maybe for the builders, so as to add to the supply, and also something to do with the registration cost of the cost of registration, rather, which is at approximately around about 7%, slightly high. Maybe some stops in that would help the housing finance industry and the builder industry.
Final question, sir. I think your guidance for credit costs is actually an improvement. Tell me if I'm looking at the right numbers. I think you're looking at 40 to 45 bips of credit cost in this year versus 60 basis points last year. If you could just tell us what are the drivers here and what's the overall outlook on asset quality?
Well, the asset quality has been improving. Yes, unfortunately, we have had legacy issues in the past, and the asset quality was slightly, I think, skewed. We have been working hard last year, the whole of last year and the years before that. Asset quality has improved. There has been my GNPA has come down from 4.4 to 3.3 last year. This year, we see a lot of scope for further improvement. Total stage 3 book size is around about 9,500 crores. On the builder book, the wholesale book, as we call it, it is about 2,500. The retail is approximately about 6,500. So we're looking for a lot of improvement in the asset quality, hoping to come down nearer to 2% by the end of this year, as far as GNPA is concerned.
Okay, and credit cost will be around 40 basis points?
Yeah, that is what we expect.
All right, and finally, before we wind this down, what about return ratios? On a price to book multiple, well, the company is placed pretty well. But what about the ROAs and the ROEs? Should we be working with around 1.5% and around 15% on both these two parameters?
Yes, ROE should be 16 plus. ROE should be 16 plus. And ROA, yes, but the guide thing, ROA will be about 1.5 to 1.6.
Got it. All right, Ms. Adhikari, always good speaking to you. Thanks a lot for joining in here on CNBC TV18. We'll hold you to those numbers. AUM growth of 10 to 12%. You're talking about asset quality improving and the NIMs in that vicinity of around 2.7 to around 2.9%. For the time being, though, we'll slip into a short break. On the other side, we'll get chatting with Mr. Keshav Bhajanka of Century Plyboards. Stay with us.
Welcome back. Well, we're looking at our next corporate conversation now, and the company in question is Century Ply. Now, the fourth quarter was a slightly weak quarter for the company, but Century Ply has given a double-digit revenue growth guidance for the current financial year. So is the target on track? And what's the demand outlook? To talk about this, we have with us Mr. Keshav Bhajanka, Executive Director of Century Plyboards. Mr. Bhajanka, thank you very much for joining in. Let's start by, talking about how the first quarter has shaped up for you. If you could just tell us about the demand trends and the volume improvement that you may be seeing, and just break it up across your different categories, laminates, plywood. What's going on so far in the first quarter?
Sure. Good morning. Thank you so much for having me on the show. I think, as we had discussed earlier as well, what is happening is that there was a lack of inventory in the market, inventory in terms of the new housing that came into play after COVID, that was under construction and that had not really hit the market. Our job begins when it goes from a house to a home. So I think now the early signs are that new inventory is hitting the market. And I think this bodes very well for us. The current financial year, like you have rightly mentioned, is going to be a strong year for us. Our guidance across segments has been double-digit plus for plywood, 20% plus for laminates, 40% plus for MDF, and 25% for particle board. I think we're well on track to achieve the same and perhaps exceed on it.
But will it be patchy, Keshav? That was the question, because first quarter we've had elections, we've had this heat wave, etc. So just trying to understand, your full year targets are intact, but could it be off to a slow start? I mean, should we be prepared for that? So just some color on Q1 trends, please.
I think Q1 is looking quite positive, and overall we will be well within. We'll be in line with the guidance. Of course, there are some new capacities, for instance, the Andhra Pradesh project that commenced in March itself. So that will take time to ramp up. But overall, Q1 has been pretty much in line with what we had thought. One or two segments might face slight pressure, but overall, we will have a decent growth in Q1.
Okay, all right. Hi, Keshav. Good morning and good to see you, Ben.
Good morning.
What about ADD on imports on MDF? That's been something that the industry has been screaming out for. Is there an update on that front, and do you expect it to come in the near future?
Currently, I don't have an update on. As you know, BIS will come into play from the first quarter of next year, February, rather the fourth quarter of this year. February is when BIS is likely to be implemented, and that is going to be a huge boost for us, because at the present moment, imports of an inferior quality are competing with us, which is hampering our ability to scale up. But as of now, there is no further update on ADD.
Okay, no further update on ADD. Got it. Can you tell us what is the incremental revenues that you could gain? Keshav, by the way, good morning and thanks for joining in. What are the incremental revenues that you see in FY25, given the kind of capacity utilization that you're expecting on your new plants? Because I heard you mention that you may exceed your guidance for FY25 as well. Once this capacity utilization comes through, then what is the incremental revenues that we're looking at?
So I would not like to quantify the overall figure, but like I've said, double-digit plus for plywood, 20% plus for laminates, 40% plus for MDF, and 25% for particle board. So weighted average, we're looking at a strong growth, which would be well in excess of 15%.
And would this also mean gains in terms of market share? Because in the plywood and laminate segment, you're sitting at about 6 to 7% market share. Is there scope to grow further there?
Definitely. As you know, there's a trend from unorganized to organized, particularly in the case of plywood, which is aiding us in gaining market share within the plywood space. MDF with the commencement of the new plant, because till now we have been a predominantly north tier. Our capacity was in Hoshiarpur, which you know is far north. So now with the commencement of a plant in South India, we are likely to gain a lot of market share in MDF as well, because we'll be a pan-India player. So I think overall, we will be adding to our market share.
Any internal target that you're working with? I mean, double digit, high teens, anything that you're looking at by, say, over the next 2 to 3 years?
Our objective has been to, maintain 25% plus in the organized space within plywood. And, well, when we look at that, I think, are more than that at the moment. As far as MDF, yes, we are looking to drastically increase market share. Because like at a 40% plus growth revenue industry that is growing at 20% means that you're gaining market share. Laminates, we have actually lost out in terms of market share over the course of the past 1 year, which we are looking to correct in the current year.
Keshav, let's talk margins, because in the plywood segment in the fourth quarter, your margins had come down. Laminates, they were okay. MDF also, there was a margin erosion. Now you're talking about, I think, margin improvement through the course of the year. What makes you confident that margins will recover? And give us some update on pricing as well. Both volume growth and some indication of price movements so far in the first quarter, if you can.
Sure. So in terms of pricing, I think that we have taken an increase in plywood as of last month. And the basic hindrance to us is a lot of increase in raw material cost, which is likely to persist for the remainder of the year, or maybe slightly beyond that as well. Having said that, in terms of margin guidance, we are fairly confident that the guidance we have given for the entire year, which is 12 to 14% for plywood, 10 to 12% for laminates, 15% for MDF, and 15% for particle board, we will be more or less in line with the same. Of course, the objective will be to improve on that. The primary reason for a reduction in margins is the increase in timber cost, and I think this has not been able to be passed on to the market yet. Maybe over the course of the year we will be able to, in which case we can look at higher margins, but at the moment this is the guidance we are going with.
So just to reiterate, you're saying that plywood, there's been some price increase last month. How much would the price increase be? And in the other segments as well, what is the likely price increase that you would be factoring in, considering the margin guidance?
In plywood, the price increase would be to the tune of 2%. Whereas in the rest of the segments, I don't see any potential for price increase at the moment. Perhaps, as I said, over the course of the year, if there is scope for price increases, we should.
Okay, all right. Final question, Keshav, before we let you go. You're going at a run rate of around 1,000 crores, 1,050 crores odd per quarter. So that makes it around 4,000 crores on an annual basis. But as you mentioned, you had a couple of units that have come on stream. At peak levels, what is the revenue potential the company can do?
I think for our Andhra unit at peak potential, we should be able to hit a revenue of close to 1,000 crores. And this is going to add to our top line substantially. Once the new particle board unit comes into play, that also can look at a 500 to 600 crore revenue increase. So I think these two units are going to be large revenue drivers for us in the near future.
Okay, before we let you go, any expectations from the budget this time? The full-blown budget kicks in July. From a sectoral point of view, what are you looking at?
I think, the cabinet and the Prime Minister have pushed housing substantially, and I'm hoping that that thrust continues. So nothing in particular, but I hope that they keep doing more of the same. As you know, that certain announcements have been made recently, which bode well for affordable housing. So I'm hoping that they continue with similar policies in the future.
All right, Keshav, appreciate you joining in. You're sounding quite optimistic about the rest of the fiscal year, and you're saying Q1 wasn't too bad, irrespective of the elections or any kind of slowdown talks. Thanks a lot for joining in and filling us in with all of those details. Well, let's focus on another company then, Mishra Dhatu Nigam. Well, the company in their Q4 conference call said that they are in talks with Pratt & Whitney for potential supply of engine components. So what's the update on the same and how is business shaping up? Well, to help us out with that, we're joined by Mr. Sanjay Kumar Jha, the chairman and MD of Midani. Hi, Mr. Jha. Good morning and thanks a lot for joining in. Well, I went through your con call, and you had briefly mentioned about Pratt & Whitney and there could be potential orders coming in there. And yesterday there were, various reports that suggested there was some progress on that front. Could you clarify, is there progress on the Pratt & Whitney front? And could you quantify what could the revenue potential be?
Yeah, in fact, recently we have started giving our material for their requirements. And, in these sectors, first of all, you have to really certify the material. The quality part has to be certified. And quality management system also should be certified for the company. So we are in the process of doing that, and many rounds we have discussion with their team, and they have also seen our facility, and more or less we have come to the stage where they are satisfied with our facility. So and based on some initial material which we have supplied to them of the right quality, right requirements, I think we are in a right path to get some breakthrough. And as and when it will come to that final one, I will definitely inform. But it's not only that Pratt & Whitney, that since Midani is having a lot of that opportunities coming in the, especially in the supplying the potential material for aero engine, or I say that in the aerospace industry, which includes our domestic requirements and coming from the developmental activities of DRDOs, and also many things in our HAL. So based on that foundation, we are able to meet their expectations. Okay. And since their requirement, their volumes are quite big, so it will be possible to get the very good business in the future. So that we are at this stage.
So you'll have already started supplying some material, but when does commercial sales start from Midani to Pratt & Whitney? Do you see it, pick up steam in the second half of the year? And for FY25, what could the revenue potential be from Pratt & Whitney? Or if this year is still going to be ironing out everything, for FY26, what could the revenue potential be?
Revenue potential for FY25, I'm not saying much. In fact, it will be mostly in the area of certification and qualification of our facility. But I say in the last quarter of FY25, we may see some in the range of 10 to 15 crores worth of supplies. But definitely it will convert into the higher volume right from the next financial year, that is from FY26.
Pratt & Whitney could contribute close to around at least 60-70 crores in FY26?
Yeah, definitely. If that part is getting converted, we have to only see that how much we can absorb, we can supply, because we have to also see our Indonesian program for our domestic requirements. So based on that, we have to decide. But moment we are through in that all qualification and all, this much potential is there in the business.
Okay. That would be a good deal, sir. And on a lighter note, maybe Midani will add the magic touch, right? Once you start supplying to Pratt & Whitney, maybe their engine issues get sorted out, and maybe we get better delivery of all their planes. It's a very prestigious logo, definitely, for you. All right, sir, just to talk about the other deal as well, we heard yesterday that there is a RFP, for 156 light combat helicopters from HAL. How big is HAL a partner for you? And, when a RFP of this size comes along, typically what does that mean for you in terms of revenue opportunity? And what is the contribution of defense in your total revenue pie as of now?
First of all, I'll talk about this LCA. For LCA, already we are supplying the material regularly for the requirements as far as the titanium alloys are concerned, super alloys requirements, and special steels. So already we are supplying. In fact, for Mark 1 and now the Mark 2 development also is going on. So there also our material is going for the developments and all. So we are very well in that portfolio. And then the volume of the business, what I say that depending on the number of aircrafts and all, it will be coming in the future. I am right now I am not having the correct picture, but you can say that whatever the material they need for titanium and superalloys and special steel, Midhani material is already certified, and we are going to supply those things. In addition to that, the defense.
Yeah, defense, just to get some numbers, out of your total revenue, how much is defense? And what I was trying to understand, since you already have a relationship, you're already supplying these parts, when such a large order for, let's say, 156 LCAs comes, it's spread over a number of years, but typically, you know, is there a pop in terms of the revenue opportunity for you? Because they'll require that much more, obviously, material and minerals and metals that you will supply.
Today, my defense order book is almost 80%, 75 to 80% we are having. And in that, only specific to LCA, very difficult to differentiate. But you know that all these platforms, whatever they are asking, it will be spread over the next 4 to 5 years, sometimes the 6 years. So that the material supply will not be at one time. It will have also in a staggered manner. So I am finding that definitely it will be around 60 to 70 crores in that range per annum coming from that sector, definitely.
Okay, all right. 60 to 70 crores of business coming from HAL with regard to this particular LCH, that's light combat helicopters, right, sir?
Yeah.
Okay, let's get a couple of quick numbers before we let you go. What is the updated order book? The last recorded number we have is around 1,500 crores. And 80% of the order book as well as defense, the remaining will be space?
Yeah, remaining space we have around 10 to 15%. Space has come down drastically because now space, the new things are now coming up. So it will be adding further. In addition to that, now we have something coming from the energy sector, something we are getting from the export market. Export has picking up. The last year we had almost 6% of our turnover from the export. This year we are planning to almost almost increase our export to coming from the 2 times. Last year we have 70 crores. This time we are planning for 150 crores in the export market.
Got it. All right.
Which includes that whatever we have discussed about that earlier company also.
And the order book is 1,500 crores, sir?
It has crossed 1,700 now as on today, but
got it.
But we have other indications also.
Leave us with just 2 numbers, sir. For FY25, we've got a sense about business. Pratt & Whitney starts contributing in a small way, and the next year looks even more promising. But for FY25, what kind of a revenue growth can you deliver? And the margins have been fairly volatile. What is the range we should work with? Just 2 numbers, revenue growth and margins.
Revenue growth, last year, the way we have done crossed almost 23% we have the revenue growth. We will maintain the same momentum this year also. And regarding the margin, last year it was got affected mainly because of the fluctuation in the raw material price, which has gone up it was a lot of initial 3 quarters we have a lot of outflow because of the higher raw material input cost. So now I am seeing that this year probably that will not be the region. So the margin will definitely try to improve there over the period of time.
Give us a number, sir. Margins will be what, 20%, 25%?
Last year we had around 20% operating profit margin. Maybe it will be coming to around 25 in that range.
Got it.
Okay, all right. We will leave it at that. Thanks a lot for joining in. By the way, the market is getting a bit volatile. Not too much, but the mid-cap index is now down about 250 points. Sensex and Nifty are just hanging on to the green line by the skin of its teeth. So let's see which way it goes. Mitesh Thakkar is joining in now. Mitesh, little bit of volatility kicking in, but for the rest of the trading session, how are you approaching it?
So, Sonia, I think we discussed this in the morning as well. It is the bank Nifty and the financials which are, showing clear signs of breakouts, and I think that's where the action is happening. a lot of buy calls, buy signals on the financial names. So I have a buy on IndusInd Bank with a stop at about 1530. Look for a target of around 1585 here. And one sell, because as you rightly said, there's some, profit booking seen in the broader market. So Hindalco is a short-term or an intraday one today kind of a sell with a stop at 681. Look for targets of 650 here.
Okay, all right, got it. Mitesh, thanks very much for the trades. We'll touch back base with you in some time. We have to take a break at this moment. Up next, Manisha with all the commodity cues of the day.
These are businesses that when we started this collectively had a market cap of less than $1 billion, and we set a target of each business to get to $1 billion. There are 10 of them. And as many got closer to it, as we often do, we raised that target further and said, now we need to grow 5x. So the collective valuation of these businesses as of the last fiscal year is $4.2 billion now. And our target is to get to 17 to 20 billion from these growth gems that we have.
If pockets like banks, metals, pharma, FMCG have a lot of value and technical strength and can be bought even at current prices. I think banks is really one place to be in because the risk reward is excellent. And my fundamental analyst tells me that from a valuation perspective, banks are still quite cheap. So yes, banks could be one of the trade of the next 3 to 6 months. Risk reward is excellent, valuations are good, and the money is flowing in because people are coming out of a phase of underperformance. The likes of Power Grid, NTPC, NMDC, ONGC, SAIL, NALCO, I think all of these stocks have a lot of headroom on the upside and can be committed into even at current levels. But I think since a lot of underperforming stocks and sectors are making a comeback, I think fertilizer looks very interesting. Paper looks interesting. The entire auto ancillary space, looks very, very interesting. Sugar has made a very good comeback. Focus on these pockets, and I think you will be rewarded with a very good risk reward. I think it's the kind of market where you don't need to apply your mind too much. All you need to do is just to control your emotions. I think that's the kind of bull market that we have been in for the last 6 to 8 months because every single dip has been bought into beautifully. Local and global testing.
Okay, shifting focus to commodity markets now. We have Manisha joining in. Manisha, good morning. So what's the commodity on your radar?
So I'm looking at the crude oil prices because we've seen constant gains come in for this one. Well, last week was the first weekly gain after 3 weeks of decline. So we saw 4% of gains in the previous week. But overnight, it has been 2% of a jump up that we've seen in case of crude oil prices. And in this year, until now, it's 11% up for Brent and 13% up for the WTI crude oil prices as well. And it's not just the crude prices. The products have been doing quite well as well. But coming to the crude prices, and if you look at the way the month of June has panned out, we did not start June on a very strong note. Actually, we have seen a low of $77.50 a barrel on the lower side as well. But from where we've climbed up to almost 86 in the Asian markets today. So that has been almost an $8 of a jump up in crude prices from the kind of lows that we have seen in the month of June. So that's quite strong there. But as I was saying, the product prices also have been jumping. So if you look at the gasoline prices, they gained up by 1.5% overnight, 18% up in this year, 4% of gains for natural gas overnight, and 16% up in this year as well. So most of the crude and the crude products have been gaining on the higher side for the last 1 month or so, and various factors for that as well. If you look at the summer demand in US, that is expected to be on the stronger side, and that can lead to a draw in inventories. Well, there are various polls suggesting that you could be looking at almost 2 to 3 million barrels of a decline in this week itself. The other factor clearly comes in from China, where the May retail sales data has come in stronger than what the street was anticipating. So any strong number that comes in from China, the street starts to believe or wants to believe that you could be looking at the crude demand improving. So that's a sentiment impact there. The US crude inventories have been declining for the last 3 weeks, and this week as well could see a 2.3 million barrels of a decline. The other factor clearly comes in from the US retail sales itself, where the data has come in weaker than the street anticipation. That has led to a dollar decline and an expectation that you could be looking at a rate cut coming in for the month of September. That probability also has increased to almost 68% from 55% in the previous week. The fourth reason is the geopolitics, where the Ukraine drone strike has caused a fire in fuel tank and oil terminal in Russia's Azov port. So that's another reason to take prices on the higher side. And that is there is various statements also coming in from Israel saying that there is a decision perhaps coming for sure where they would go out on an all-out war with Hezbollah. So these are the premiums that also seem to be coming back in case of crude oil prices. But mostly it is short covering from the speculators that has taken the prices higher. And as happens in case of crude prices, once you see this movement pause or halt, you could be looking at profit taking coming back as well. But many of the banks and brokerages believe that with the kind of deficits that we are looking at or withdrawals in case of crude, the third quarter could see higher prices for markets.
Okay, all right. Thank you very much for that, Manisha. With that, let's come back to the equity street and talk about some of these marquee block trades that have been underway. Nimesh is joining in. So, Nimesh, on Indus, most of the blocks, are they done, or I don't know, it's still being executed, considering it was a massive amount that that was being sold?
Well, it's a done deal now, Surbhi. So 20% equity has got changed hands. So Vodafone has sold their entire stake. So they were running close to 21.5, and the nearly block is around 21%. So it looks like it's a clean out trade as far as Vodafone is concerned. Now, the deal got executed at the lower end of the price band, which is around 312 rupees per share. Now, in terms of buyers, I understand the indication even in the pre-open was that some domestic mutual funds were anchor investors, couple of FIs, including hedge funds, were buyers. And so is the one of the large strategic holder is also a buyer in today's block deal. So the disclosures could be quite interesting. My sense is Bharti would have participated in today's block and increased the stake to close to 50%. That was an indication in the bid. So that confirmation needs to be seen. Now, what happens post deal? There are a couple of alternatives who have written notes on Indus Tower, and they believe that because the promoter holding has now gone down, the free float has gone up. The weights will increase in both MSCI and FTSE. For MSCI, the indication is that this could mean an inflow of close to $100 million. And in FTSE, the indication is it could be an inflow of close to $53–57 million. So you will see close to $200 million of passive buying in the next few days, since now that the block is done. But I guess what to watch out would be in terms of confirmations on some large buyer names that will come post markets today.
Okay, all right. Got that, Nimesh. Thanks very much. That's a large block on Indus Towers, and it's finally been completed. Thank you very much for that. Let's move on and talk about Zomato. Zomato has been seeing some interesting price and volume action. Of course, the street seems quite excited about the prospects of a deal fructifying with the Paytm for their entertainment and lifestyle business. Manglam, what's the latest?
Well, the latest is brokerages are now taking note of that. And yesterday, there was a bit of sell-on news coming in for both the stocks, Paytm as well as Zomato. But today it seems to be picking up once again. UBS has written that Paytm's ticketing business actually fits in well with Zomato's going out offering. In fact, back of the envelope calculation suggests that at around 1,500 to 2,000 crore, the valuations at which Zomato will be buying this business will also be fairly reasonable. And as a result of which, they haven't made any tweaks to their estimates yet until the deal does fructify. But if it does, it would be a positive for a business which, gave them about 258 crores of revenue in FY24. That's the going out business. And as a result of which, they have a buy rating and a target price of 250. So Zomato is doing well.
Oh, it absolutely is. In a market where actually, non-index names are not doing that well. Manglam, thanks for that. As we take the final break and before we hand it over to It's the Economy, the mid-cap index is down 0.6%. So there's a lot of profit taking in the broader market that one must note. And the advanced decline ratio is already negative so far early in the morning. Otherwise, the Nifty is flat. The Bank Nifty, by the way, absolute flyer on the Bank Nifty. Look at that index go 1.5% up. That FPI buying has started coming in, and it's really showing up in these large blue chip banks. But yeah, the mid-cap space is where the concern seems to be for the bulls. Let's take a quick break. On the other side, we'll have our special segment, It's the Economy. Lata will get chatting with the MS Money of Deloitte India and Vivek Johri, former chairman of the Central Board of Indirect Taxes and Customs, to talk about expectations from the GST Council meeting. Stay tuned.
Handled wonderfully, and I think the market is as strong as ever. As a technician, I always look out for overbought signals or topping signals, but even at current levels of 23,500, I don't see any such signals on the charts. In fact, after what happened on June 4th, I do believe that the market is internally and structurally even more stronger, And I think we are going to see much better days ahead, and the best is yet to come.
Mr. Shah, we've got a fair bit of numbers and we've got a sense of the businesses as well. But I think let's, get a little bit more into knowing you. I think Nimish...
We'll do a quick rapid fire with you before we let you go and your team go. Okay, let me start with my first question, which is the one business leader that you admire, but you can't opt for Anand Mahindra. So beyond your group, if you want to, if one business leader that you admire.
No, in this case, I would go for Anand Mahindra because of a number of reasons.
No, it's not. I understand it's not an obvious choice. Of course, you admire him, but okay, beyond Anand Mahindra, if you want to choose one business leader that you admire more.
I would say Satya. He's done a fantastic job. And he came in at a tough time, and he's really built a company well and set it up very well for the long term.
All right. What about your favorite sport, and what are the prospects of India winning the World Cup?
I have two favorite sports. I can't give you a direct answer on this. One is cricket, of course. That is an all-time favorite. But the second is American football. Because I spent many years in the US as well. So both have a very high degree of passion. Our chances of winning are very high if we play as one team. That's the most important part.
You spoke about you travel a lot. If I want to ask you your favorite destination, whether it's India or abroad, what would you choose? And of course, again, you can't choose Mahindra on this.
My favorite destination is Spain.
Okay.
Love the Spanish culture, love the investing.
Welcome to It's the Economy. The GST Council meeting on the coming Saturday has elicited high market interest on hopes that some big changes may be announced since it's coming before the budget. For instance, experts are hoping that the number of slabs may be reviewed and the government may do away with the 12% slab, divide the items to the 5% and the 18% slabs. But my colleague Timsi Jaipuria learns that fertilizers may not be fully exempt from GST because the industry is complaining that will lead to duty inversion and therefore a locking up of capital. Meanwhile, gaming companies and NBFCs are also nursing hopes about GST exemptions or reductions. To discuss what changes we may reasonably expect, I have with me Mr. Vivek Johri, is the former Central Board of Indirect Taxes and Customs Chairman, an expert on indirect taxes, and Mr. M.S. Mani, the GST expert from Deloitte. Gentlemen, good morning and thank you very much for sparing time for us. Mr. Johri, first up to you. New government and, hopes that it is coming before the budget. So you think something as radical as removal of a slab will be even mooted?
Thank you, Lata, for having me on the show. In my view, this is a preliminary and the first meeting of the new government. And we must also remember that it is in the context of the budget, which is likely to be presented in the third week of July. So I think that what the council would look at this stage are issues that mainly involve legislative amendments. Also, I would remind the viewers that, on the rate rejig, that is reducing the number of slabs from 4 to 3, there was a group of ministers which was set up long ago. They'd given the interim report, which was in June 22, that was implemented, and which recommended, if you recall, a large number of withdrawal of exemptions. The council had approved those changes. Some clarifications also given about rates. What remains is the larger chunk of the mandate that was given to the group, which was, how to condense 4 slabs into 3. As far as I know, there is no, the final report of the group has not been submitted. It works under the chairmanship of the finance minister of Uttar Pradesh. So I think having set up a group of ministers, the council would like to await their recommendations before taking a final call. In any case, that does not involve a legislative amendment. It can be done by notification.
So, a short point, we mustn't pin our hopes high on that process getting any acceleration, correct?
That's my view. That's what I think.
Okay, I've got larger questions for you. But Mr. Mani, if this big thing is removed, what can we expect? I mean, Mr. Johri is speaking of legislative changes, and I'll go back to him on that. My colleague is picking up that fertilizers will not be fully exempt from GST because that will mean that there is an inverted duty structure. Do you think this will be followed up and even textiles could be included in this?
So the way I look at it, Lata, is the fact that this meeting is coming at an interval of 8 to 9 months after the last meeting. And we have not had such a long interval in the recent past, in the last 2-3 years or so. We used to end up having a meeting once in 3 months, 4 months, or 5 months. And GST being a transaction tax, it is more like a business tax. We actually need a meeting every quarter because the issues that crop up for various businesses, the only body which can address it is the GST Council.
Okay, so what should we reasonably expect?
Absolutely. So this particular meeting, as Mr. Johri said, we should keep our expectations on the lower side because they are meeting after 9 months. They'll have a lot of items on the agenda. Fertilizer could certainly be one item, and the fact that the industry itself is saying don't exempt it because it leads to an inverted duty structure is a welcome change. Because in the past, we have seen various businesses lobbying for a change and then going and saying we have an inverted duty structure, what do we do with the credits that we have? Equally, there are a host of issues that have cropped up due to various investigations conducted in the last 6 to 9 months or so. And many of these investigations have resulted in very large demands, some on listed companies and some on unlisted companies. And most of these businesses will be looking for some clarity, some guidance from the GST Council meeting when they meet now.
Okay. So some kind of overall, cleaning up or speeding up of processes. Mr. Johri, you specifically said that where legislative changes are needed. Can you be more specific? What is in your mind? What should we expect item-wise, product-wise? Mr. Johri? Oh, okay. I think he was adjusting his camera. We should get him in just a minute, if not on video, at least on phone. Mr. Mani, what are you expecting something in terms of relief for the NBFC companies? We heard from them that co-lending is coming under GST and they are against it.
So co-lending coming under GST is certainly a matter which needs to be resolved. You were also mentioning legislative amendments.
Yeah.
So one of the expectations that we have on the legislative amendments is that business practices that are specific to a business will be respected by the GST processes and the GST law. Each business process, so in NBFC you mentioned co-lending. Similarly, in case of the insurance industry, we have issues relating to reinsurance and co-insurance.
Yeah.
We of course have online gaming in where the valuation rules are coming into play. In each of these, what is happening is that the GST law is not recognizing the business practice, and it cannot obviously recognize all the divergent business practices across the country. So what is required is actually an umbrella provision where the government and the tax authorities have the power to respect the business practice and grant relief to a particular industry. That is one of the key expectations that all businesses have from this particular meeting, where possibly an enabling provision will be introduced, which permits them to take into account the practice of a specific business and then issue a notification pertaining to that particular business.
Okay, got it. Mr. Johri, would you want to comment on that? Whether you expect, a greater discretion at the hands of the tax authorities to respect specific businesses? And secondly, what you alluded to, topics where legislative changes are needed. What did you have in mind?
Yeah, so thanks, Lata. Look, I don't think we would have a provision where tax authorities at the field level would be given this discretion. I think what Mr. Mani also is suggesting is that there would be a legal provision by which the council would approve the recognition of certain practices in certain lines of industry or business, that would be recognized for the purpose of GST law. That's a fair ask, and that may happen. What I'm expecting also is that there is this issue of retrospectivity of some of the clarifications which the GST Council has given in the past, or amendments that have been made to law to clarify a certain position. And there is a possibility, taking a cue from what was there in the earlier indirect tax laws, there is a possibility of introducing a provision by which you recognize and exempt the tax in case there was a general practice of not paying that tax in the industry because of an interpretation that the industry had been adopting as a matter of general practice. So if you recall, both in customs and in excise law, there was such a provision. And the council may well consider, introducing such a provision in the GST law as a means of ease of doing business.
Okay. So general market practices may be given recognition through some suitable amendments. Mr. Johri, the great body of viewers at this point in time on CNBC are people who are invested in stock market in various sectors. Is there any sector that we should keep on our radar, like NBFCs and co-lending, or like gaming, or fertilizers, or textiles?
Well, I think these are issues that have come up from time to time. You have the issue of corporate guarantees. There was some lack of clarity which was flagged by the industry with regard to that, for instance. Then there are some follow-up decisions, follow-up on decisions that the council had earlier taken. And I recall at the 51st meeting, the council had asked the law committee to work out an exemption for extra neutral alcohol. So I think those are the kind of legislative amendments that may go through. There may be some relief given, if I may call it a relief. There may be some facilitation done, for instance, in filing of returns. And there has been this debate about what is the correct sort of record for the industry to assess the availability of ITC at a particular point in time when they're paying the tax on the 20th of every month. So if you recall, GSTR 3B has been, accorded that, 2B and 3B have been accorded that status. So if you have to freeze that, then there are invoices and documents that get left out and for which the business is not able to take credit in that month. So there should be some document by which they can transfer this credit to the next month's account. And that may get facilitated. And also taking a cue from what FM said soon after taking over, and she emphasized, the need to do more work on ease of living and ease of doing business. So I think there would be some facilitation measures for sure in this meet.
Yeah, we understand that there can be a specific level, say 20 crores, you go to the appellate authority, more than that, go to the High Court. Even those kinds of ease of doing business is expected, we don't know. But Mr. Johri, finally, we are ahead of the maiden budget of the new government. Therefore, can there be something which dovetails both of them and that, we as investors and taxpayers should keep in mind?
Dovetail with what? I'm sorry.
I don't know. Something that is announced in the GST Council and which may, find fuller play in the budget. See, GST is not the central government's preserve and therefore is not linked to the budget. But, the taxpayer and the economy view it as both as tax authorities of the government. Will there be any connect? Anything that occurs to you that can be common?
That's why I mentioned to you, Lata, that, the changes that would mainly be looked at would be legislative amendments. Okay. And, there could be, for instance, I'm just loud thinking because this has also been a demand of the industry. There could be a reduction in the pre-deposit amount for filing an appeal. Currently, as you're aware, it's 10% off the disputed amount or 25 crores, whichever is lower. So the council may want to reduce this because many taxpayers have flagged this issue of having to expose themselves to this payment. Before they can file an appeal. This will again involve a legislative amendment because 10% is mentioned in law. So those are the kind of things that I think can get dovetailed. Corporate guarantees is another one that I can think of. There's a lack of clarity about recurrent guarantees and whether the 1% will apply to a one-time thing or for the entire tenure of the. Yeah.
Okay, there's a lot then for the tax authorities and for companies to watch out for in the GST Council meeting and in the budget. Thank you very much, Sir Jory and Mr. Money. Lots of things on the market's mind. Gaming would be on top of it. Fertilizers, NBFCs, all of them are eagerly watching what the GST Council might say. But we will know that on Saturday. For the moment, it's a wrap with Bazaar. Chartbusters coming up.
That the people have there, just a wonderful place.
And if you recommend one book that you would meet someone and tell them you recommend to read that one, which one would it be?
I'd recommend a P.G. Woodhouse book, Leave It to Smith.
One favorite car, if I want to ask you. Again, you can't mention M&M, but beyond M&M portfolio, if you want to choose one car, what would be that?
That has to be M&M. So there is no going beyond that.
I've always seen you, in a very formal attire with tie and everything. But if been asked, what would be your favorite thing? A casual wear or a formal wear?
Casual, of course.
Okay. Why can't you bring that culture into M&M as well? I mean,
we shall take that back for consideration.
Bollywood or Hollywood?
Bollywood.
Favorite picture?
Favorite picture would be Kabhi Khushi Kabhi Gum.
Okay. Finally, one trait that you think a business leader should have or should possess. What would be that?
The ability to connect with people and to be able to understand what their views are. And that's not just the team, but all stakeholders.
The skin can fall prey to a host of afflictions, from the common agony of acne and the persistent itch of atopic dermatitis to the silvery scales of psoriasis, the discomfort of allergies, and the fiery torment of shingles.
Fairness creams, which are a combination of the steroid with this hydroquinone, which leads to not only thinning of your skin, but an ashy kind of dermatosis, which gives you this grey skin look. And by the time they come to you, the damage is actually to such an extent that it's almost impossible to repair it completely.
Psoriasis is a chronic inflammatory disease, and it's more than painful. I think it's an uncomfortable disease. Sometimes it's not treated adequately, and it's important that in all cases, first of all, you must have a dermatologist.
This is India's election headquarters.
As the verdict emerges, the markets will react,
Bringing market movements into sharper focus with the most authoritative insights.
Indus Towers under pressure after over 20% equity changes hands via block deal. Sources tell CNBC-TV18 Vodafone has likely sold 20% at an average price of 312 rupees per share. The stock falls nearly 5%.
Fertilizer stocks, Chambal Fertilizer, RCF and fact gain. Sources tell CNBC-TV18 that the Fitment Committee has recommended further deliberation over proposed GST cuts on fertilizers, as a blanket exemption could lead to duty inversion and blocking of capital.
Sansera climbs more than 5% after nearly 12% equity changes hands in multiple large trades. Sources tell eBean and CVCIGP are the likely sellers.
Gold jewelry stocks, Kalyan Jewellers and Senco shine after brokerage firm Motilal Oswal initiates coverage, citing that they are optimistic of the jewelry category and see a strong trend in formalization.
Le Travelers Tech or Ixigo rallies for the second day post-listing on the exchanges. Now the stock has moved to 2 times the value of its issue price at 93 rupees per share.
Hello and welcome to Chartbusters. I'm Nigel D'Souza. Joining me as always is Mangala Malu. And as you can see to the top of the screen, well, the screen is looking a little bit mixed. The Nifty had started off well in the green. We were up close to around 50-60 points odd. Now we're down close to under 100 points. Some kind of profit taking is what is creeping in, at least as we speak. The mid-cap index, that's getting a harder knot, Mangalam. It's down more than 500 points.
Yeah, but I guess the street was waiting for the Nifty Bank to hit a fresh record high. Before that, it takes a bit of profit. back home as well. And that's exactly what's taking place right now at the low point of the trade for all the frontline indices, but nothing really to worry given the sort of up move that we've seen in our markets over the last 10 days or so. Yesterday, there were signs of maybe the market nearing its top, largely because of the way we saw the India VIX rise. And now as well, as we speak, the India VIX has risen about 6.1%. So maybe some bit of complacency which was there in the markets is now getting undone, and as a result of which we are seeing some bit of profit taking. But where do we go from here? Because 23,450 seems like a bit of a support, especially given the put writing that we had seen at 23,500. Whether we bounce from here or not, Soni Patnaik of JM Financial joins in for a quick technical check on the market for the same. Soni, good morning.
Good morning, Mangalam, Nigel. Thank you for having me on the show. I think what was important for me, the level was 23,400. It was the level that was getting aggressively written last Friday, and a lot of support was seen. So I think that is the level that has gotten defended even in today's fall. So going forward, if 23,400 is broken, it's breached, and there's a closing coming below it, you can see further profit booking towards 23,300, 23,100 level as well. However, if it's not getting broken, then there can be a consolidation of 200 points between 23,400 to 23,600. So that's going to be even more difficult. But as of now, just stay a bit cautious in the market, especially when it comes to Nifty. And with us, 23,400 is the level to watch out for, especially on closing basis. Talking about Bank Nifty, I think Bank Nifty targets 51,000. It's done and dusted. So there's a bit of a cautious outlook even on Bank Nifty. However, in the comparison, Bank Nifty is still faring better because individual stocks are giving a lot of support. So I think Bank Nifty, it's a buy on dip. So around 50,500, one can actually look forward to reinitiating the longs. Again, 51,500, 52,000 levels can be seen, but it's a bit of a positional play.
Okay, all right. Hi, Soni. Good morning. Good to see you in. So you got the levels out on the index. What about individual stocks?
The first stock pick would be on a sell side, that is in MFSL futures. It has broken below 1,000 levels, so I think it's looking weak on an option chain breakdown. One can sell in futures of June expiry, keeping a stop loss of 1,000 and a target of 960. The buy side comes in HDFC Bank. It has given a good breakout above 1,600. It's sustaining also above it. So on current levels, one can buy, and on slight dip towards 1,615, HDFC Bank can be bought, keeping a stop loss of 1,600 and a target of 1,650.
All right, take that point, Soni. Thanks a lot for that. Before we move on, just keep an eye out on a couple of stocks. Z Entertainment down at the low point of trade. Remember, the CFO of the company has resigned, so another development out there. So that stock lower. We're also seeing some decline in a couple of these gas names. So you have Gujarat Gas, which is lower. GAIL itself is down at the low point of trade, and Voltas too is coming for a bit of profit taking. But let's get you some ideas of profit coming in from our colleagues at Money Control Pro. And today we have Anubhav Sahu joining in.
Well, we have a cautious stance on US-focused pharma generics players, and amongst that, we are turning underweight on Dr. Reddy's. Now, recent news flow suggests that there is a sharp decline in generic pharma prices in the current quarter. Now, this would not only weigh on realization for key US products, but also compress the margins. To provide a perspective, in last few quarters, Dr. Reddy's has been posting a gross margin of about 58-59%, which is way above their normalized margin of 53-54%. Now, key driver for this has been strong traction for the blockbuster product Revlimid and limited pricing erosion in the US market till recently. At present, we don't foresee a material opportunity in near term which can offset lowering of contribution from Revlimid. However, there could be an inorganic foray as a company is sitting on a cash surplus of close to 6,500 CR. Further, there are few growth catalysts to watch, like traction for CAR-T, scope of work on semaglutide, and distal therapeutic products for migraine. That said, due to the US business trajectory and also due to ongoing investments in India, we believe margins will moderate from here. At the same time, valuations are clearly ahead of long-term average.
Right, Anubhav, thanks a lot for that. With that, we'll step into a short break. Come back. On the other side, we'll be joined by KL Bansal, who's the CMD. Along with him will be Sameer Agarwal, who's the CFO of D Development Engineers, to discuss the company's IPO that opens today. Stay tuned for that.
We saw the Sensex going up by 2,500 points.
In this pessimistic environment, there is a lot positive also. Please don't underestimate the 8% momentum in the economy.
Exploring election breakthroughs from the newsroom to the field.
The numbers have changed significantly in the last few minutes, even as far as UP is concerned.
Things are not looking very good for the ruling regime at this juncture.
Of course, things are changing, but it looks like a formidable victory at this point in time as far as the NDA is concerned.
Harnessing the power of over 25 years of world-class business news journalism.
You're getting all of this analysis live from the CNBC-TV18 election headquarters.
CNBC-TV18 emerged as the clear leader on television and YouTube on election counting day.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21.
Welcome back. You're watching us here on Chartbusters. Let's take note of the primary market action now. We have a new IPO that is opening today. Piping solutions company D Development Engineers IPO opens for subscription today, closes on the 21st of June. They plan to raise a little around 418 crore rupees through the IPO, of which the fresh issue would be 325 crores and an offer for sale 93 crores. KL Bansal, who's the chairman and managing director of the company, joins us. Along with him is Sameer Agarwal, who is the chief financial officer of the company. Thanks a lot, gentlemen, for joining in, Sameer as well as Mr. Bansal. Apart from the business, the growth, etc., the one thing that the street would like to know, and that's before they make any investment in any listed company, is the return on equity. And if we look at both your return on equity and return on capital, they've been around 3%. What is the scope for improvement here on return on net worth and return on capital employed going forward? Any of you all can answer?
Yes, Sameer will answer.
So you must notice that the company is having a legacy of 35 years. In past, the company has done fairly well and cleared the EBITDA level ranging between 20 to 22%. Since we are coming up with our new facility, which is closer to the Kandla and Mundra port, and our product line is heavy material, therefore that facility is going to bring lot of saving in terms of logistics cost. Since it is a new facility, there would be a sufficient amount of operational leverage as well. And we are actually enhancing our capacities. Therefore, the allocation of fixed costs shall get reduced over a period going forward. Therefore, we see a lot of scope in terms of increasing our margins, and going forward, we shall have a much better PAT margins, ROCE and EPS.
All right, Mr. Agarwal, good morning and thanks a lot for joining in, and welcome to the show, Mr. Bansal, as well. So then an ROC of around 10%, would it be moved to double digits? Is that the aspiration?
Yes, we are foreseeing that number, and we don't find any kind of problem, since we have actually bifurcated our product line and sector line differently, and we have allocated the product line to the respective facilities, which will bring a lot of operational efficiency.
Okay, all right. Let's focus on a couple of aspects then. Out of the total money that you're going to raise, you're going to be paying back, I think, 175 crores. Could you tell us what is the current debt in your books? What are you borrowing that debt at, the borrowing cost, and what does your debt come down to?
So, at present, at group level, we have a debt around 400 crore rupees, out of which we are repaying 175 crores out of offer proceeds, and this will bring down the debt level to 225 crore rupees. The cost of debt is around 9 to 9.5%.
Okay, all right. So you'll directly be saving around 17.5 crores approximately of interest cost.
All right. You said that you will leverage your capacity going forward because you've invested in capacity expansion. You've also invested further in capacity expansion. But what's also interesting is that your capacity utilization has been around 52% over the last 3 to 4 years, the reported period that there is. Why are you investing in capacity when you are not utilizing your current capacity already? And what is the peak revenue at peak utilization?
Let me take you a little bit down the line of the history of our company. As we told that we have a legacy of 35 to 36 years of legacy, and we have always worked in profit, and second thing is that, we never had any dearth of orders. The only constraint has been the capacity. And now you will say that why our capacity is underutilized. Here I have to say that, these are the government documents when we were serving the power sector, the unit of measure is metric ton on which we work. While in the last 4 years, we had to switch over to oil and gas sector because of the downturn of power sector in the Indian domestic market. And, where the unit of measure for oil and gas job is not metric ton, while it is called dia inch of the work which we do on a daily basis or on a monthly basis or on an annual basis. And if you see our capacity, which is an actual capacity in the last year, we have a capacity of our Parval plant at 18 lakhs dia inch per annum, while we did more than 28 lakh inch dia of welding in the last year, which means, we had already operated, we are operating the plant at more than 100% of the capacity. But since it is it's a document going on from years together, and it has been amended from time to time based upon that unit of measure only. So that's the reason. Yeah. And, just to explain you further, the power sector jobs are high in weight and less in volume, while the oil and gas sector jobs are very high in volume, maybe 4 to 5 times of power sector job, while they are comparatively much lower in weight. So that is the anomaly, which you are seeing on this. So that is the reason, we had planned for the additional capacity, and that which is going to give us very good dividend in terms of dia inch capacity.
Okay, all right. Hi, Mr. Bansal. Just to go according to the capacity utilization levels and the capacity, as of the last year, I think the total capacity was around 95,000 tons. And then you added another facility of around 3,000 tons. You're also in works of adding another 9,000 tons. So by the end of this fiscal, will the capacity be something in the vicinity of around 106,000 tons?
Yes, yes, please.
Okay, that's correct. Got it. And since Mr. Bansal and Mr. Agarwal as well, you all were talking about the good order book that you all have. What is it right now?
So we have had an order book of around 828 crores as on 31st of December. And, as I told you just before sometimes that, we never had felt any dearth of orders during all the 35 years.
Correct. No, Mr. Bansal,
yeah.
Mr. Bansal, we have that number 828. But, we have quite a few months have gone past. So we want to know how much higher is the order book today? As you mentioned repeatedly, no dearth of orders. You're well placed. Things are looking up for the power segment. So then there'll be some more focus on power from oil and gas. So could you give us an updated number? What is it?
It has swelled a lot. It has swelled a lot. I don't know whether I can give the numbers or not, but it has swelled a lot. I can only tell you that.
All right. So from a revenue perspective, what is the likely growth going forward? Because last 3 years, you have compounded at around 10% with margins of around 12.5% in the first 9 months of this fiscal. Would you continue to grow at 10% or would you grow faster than that? And what is an optimum margin band that you're eyeing?
as you see our last 3 and 9 months numbers, we have grown more than 12% on year-on-year basis, except the COVID period. And going forward, the kind of capital cycle on and the orders in hand, we foresee handsome amount of growth going forward. And since this capital cycle is fairly large, therefore we don't foresee any dearth of orders going forward for another 7 to 10 years' time. So both power sector and oil and gas sector, including chemical sector, including nuclear power, every sector is growing at a very, very fast pace, and the project cycle also have squeezed a lot. Therefore, we foresee a good amount of rise in our top line as well as bottom line.
Will that be higher than the last 2 years of 12% that you're talking about?
Of course, yes.
Okay.
Okay. All right. A couple of more factors. And what is the current working capital day cycle? I'm looking at inventories. That's moved up considerably.
So, whatever numbers currently which is available in public domain in the offer document, that has little bit on a higher side. The reason is very, very clear. As Mr. Bansal has just said, that we have actually overutilized our mother facility based at Plywood. So the process time to complete the manufacturing process we didn't get, and that is why the material got stuck at our stockyard. I must tell you, we are working in a very niche sector where the raw material for us is not available as commodities are available. We are utilizing seamless pipes with different metallurgy, with different sizes, and we have to procure our material across the globe. So therefore, the procurement takes little more time, and we need to keep this raw material in stockyard for a longer time. This is the inherent nature of our business. Since we are in projects, therefore we have to follow this route. But I can tell you, since we have already increased our capacities and we have gone nearer to the port, therefore there would be a substantial amount of downfall in terms of inventory days, as well as since the project cycle of the OEMs have gone reduced, therefore there would be a good amount of reduction in payment cycle from the customers as well.
All right. So from the numbers that you've given to the shareholders in your RHP or prospective shareholders in your red herring prospectus, it seems as if this year you will end, fiscal 24, you will end with inventory, with working capital days of around 183 rather, and FY25, it'll be about 166. These are numbers given by you in the red herring prospectus. Final question before we let you go is your new business, the new business that you've added. Just wanted to know what exactly is the opportunity here. You expanded your business vertical of design, engineering, fabrication. How much can this be as a proportion of your revenue going forward?
So there's a huge potential for this particular business which you are talking of. We have added a new line which we call it as pilot plants, and pilot plants is the need of the hour in our country today, as the government of India has a lot of focus on Make in India. So every chemical industry, every refinery, every research lab has been targeted that they must produce something new of their own, which can be produced in India. So for that, pilot plant is a basic equipment or a basic setup on which all these trials are done. And we are expecting huge traction on this in terms of volume, and since this is a very highly profitable business, so our PAT line, our bottom line, and PAT will also increase substantially.
Okay. All right, gentlemen, thanks a lot, Mr. Bansal as well as Mr. Agarwal, for joining in and filling us in with all of those details. We'll wish you all the best with regard to the IPO. And on listing, we re-invite you on the show, and maybe we could get some future projections as well. For the time being, we wish you all the best with regard to this issue. Well, for the time being, though, we'll slip into a short break, come back, continue to focus on markets and stock-specific action. Don't go anywhere.
On CNBC TV18 and CNBCTV18.com. The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Welcome back. As you can see at the top of our screens, the Nifty still not much changed from the time when we opened the show, with a cut of almost 100 points, around 23,450. The mid-cap index sitting with a deeper cut of almost 700 points. And the stocks which are actually seeing a bit of profit taking right now are the industrials. We had Cummins, which is at the low point of trade, ABB India lower as well, Honeywell along with Siemens, all of them lower in today's trading session. Remember, we saw a big move on the way up on all these stocks in the last couple of weeks. The Nifty Bank still holding up in the green by virtue of the contribution coming in from HDFC Bank.
Well, that's right. That's the lone ranger today. The Nifty Bank still in great form, but the other indices have slipped into the red. We'll wrap up on this edition of Chartbusters, but you stay with us. Trading Hour comes up next.
Great way to celebrate our own 25th year, with new milestones being achieved on the Lal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC TV18, embarking on a quarter century of excellence.
CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube.
These are businesses that have a great market position. In many cases are leaders in what they do. Some have been playing in smaller niches and we need to expand those. These are businesses that when we started this collectively had a market cap of less than $1 billion, and we set a target of each business to get to $1 billion. There are 10 of them. And as many got closer to it, as we often do, we raised that target further.
Hello and welcome to Trading Hour. I'm Sonal Bhutra. With me is Hormaz Patakia. Good morning, Hormaz. And you know, today some profit booking has set in. This is after 4 continuous days of gains that we've seen. Yesterday as well, Nifty hit a record high. So we've come up from those levels, around 70 points from the highs that we've seen yesterday. But for now, Nifty is down 54 points. There's been a recovery, a swift recovery in the last couple of minutes itself. And this is led by Bank Nifty. So Bank Nifty is the one which is outperforming today. That one is up 1.1%. And a lot of these big banks, be it ICICI Bank, be it HDFC Bank, they are supporting the Nifty today. So a little bit of a spike that we are seeing on the Bank Nifty, and that is courtesy ICICI Bank and HDFC Bank as well. Mid caps, they have come in for some profit booking today. But again, that was par for the course because this index has done so well.
Par for the course, and good morning, Sonal. And you know, it's been the kind of move that you've seen in the broader markets. You mentioned Nifty was up for 4 days, and the move that you saw, the mid cap index, the small cap index and the PSU index, all of them are seeing their first day of decline after the 4th of June. Which is after the Lok Sabha election results. So the kind of move that you've seen in the broader markets, not the kind of, so some bit of profit booking, of course, yes, is par for the course. And the mid cap index, the small cap index was an outperformer yesterday as well, even when the mid cap index moved in line with the benchmark indices. But the Nifty made a new high today as well, now seeing a bit of selling pressure at higher levels. But the Nifty Bank today is the star of the show, surpassing its previous record high of 51,133, making a new high of 51,215, which was the day's high, and it's still holding on to the gains. Is the Nifty Bank back above the mark of 51,000? So good going there as well. The one sector I actually wanted to highlight though was the PSU space. I was mentioning that the PSU index is down for the first time after the 4th of June, and the particular pocket there is defense, and within those as well the shipbuilding stocks, which were absolute high flyers all through since the election results as well. The recovery that came in there, you can see Masgaon Dock is now 4.5%, Cochin Shipyard down 2.5%, Garden Reach also seeing a bit of profit booking in today's session as well. So good going. The market has seen a bit of a move and some bit of profit booking coming in at higher levels.
It is, and again, as we've been pointing out, it's par for the course, the way markets have moved in the last couple of trading sessions as well. But it's the start of the show, so let's get some market conversations going. Pratik Parekh from Nuvama Group is joining us now to discuss market fundamentals, the top sectoral picks, and how he is looking at the markets at current levels. Pratik, good morning. Thank you so much for joining us on the show today. Well, you know, I was just looking at your report, and it's quite interesting where you talk about how consumption would bottom out in FY25, and there are some triggers as well, or select sectors that you like as well. Tell us more about it, and more focus on cyclicals, because this is a space you can't really time very clearly. So which are the sectors you're liking here?
Yeah, thanks, Sonam, for having me over. Last 1.5 years, we've seen a very big rally in markets. The rally has been led by cyclical sectors, and within them, more on the capex heavy ones like industrials, uh, you know, uh, the defense, the PSUs, all of those ones. However, the discretionary consumption one have actually been left behind. Not only that, it's one of the very rare times where we have seen actually exports and private consumption both being weak, and yet cyclical sectors doing very well. Generally, cyclical sectors are a byproduct of consumption and exports. If both are weak, we seldom get to see such a scenario play out. Now, what we think of going ahead is that for F25, we see some green shoots of bottoming out in consumption. That is aided by 2 or 3 factors. One is clearly normal monsoon. The weak monsoon last year did have a hit on agri incomes and the lower end spending power as well, which I think should come back. So I think that should definitely provide some stability. Second is that consumption in general, is also having a statistical tailwind of low base, which in turn should help, the growth numbers look somewhat better from year on. And third, at least we think that from a relative basis, consumption companies, the earnings downgrade risk is limited. Expectations over year have been marked down, whereas those in the industrial space are still running quite high. And finally, if you look at the valuations and the relative performance, a lot of consumer companies is where the ideas now lie. Because on a relative basis, valuations are cheaper, and also in consumption, you have pockets which have underperformed quite meaningfully in last 1.5 years. Now, how do we go about selecting stocks or sectors in the consumption space? Our methodology is we look at a 4-factor framework of demand, competitive intensity, the cost, and the valuations. And based on that, we've come out with some sectoral ideas within the consumer pack, because within consumption as well, it's not like there's a buy or there are valuations are comforting everywhere. There are a set of companies or sectors where we think which are at the turnaround stage, and there are a set of companies or sectors which we think would be a potentially at the mature stage and could potentially face headwinds going ahead per se. So,
Prateek, good morning. Thanks a lot for joining in. And since you mentioned you have highlighted some sectors, would you like to share those with us? Which are the sectors that you have highlighted, sorry, as a potential turnaround story?
Yeah, so I think those essentially lie in the space which involve the low ticket consumption, which can be, for example, consumer durable space, where despite real estate sales doing very well, this is a space which has lagged behind. There we are seeing early signs of things bottoming out and demand perking up. The second will be those linked to rural consumption, which can be FMCG, or to an extent even QSR, where we have had, very weak demand, where things, at least from a demand standpoint, we see bottoming out. And also in some of these spaces, the competitive intensity is also reducing. I mean, for example, in the QSR space, at the current margin levels, you could see moderation in store additions, which in turn could perk up margins and SSG. Similarly, in FMCG space, while there are gross margin tailwinds are behind, companies are focusing on operational efficiencies to boost margins and profitability. And also with volume growth bottoming out or potentially rising, it provides a natural operating leverage of sorts. So I think from a turnaround perspective, those sectors or companies which have actually underperformed last 2.5 years is where we are getting more comfortable, which is FMCG, QSR, durables will be the top ones. And apart from that, telecom, airlines, we feel that and internet, we feel that the tailwinds are still in their side, and they should continue to have a good run going ahead as well, Professor Mas.
Okay, so these are some of the sectors that you like. But Prateek, do you think rising costs, that could be a risk going forward, and that could squeeze in margins and profitability as well for some of the sectors?
Yeah, that's a good question, Sonam. I think the tailwinds from lower cost were a big factor in FY24. Especially, I would say, for auto companies, for auto ancillary companies, even to some extent paint companies. But the benefits were not broad-based. For example, if you look at FMCG companies, a lot of those tailwinds that they got from lower input prices were passed on to the end consumer. So I think in those areas where a lot of these tailwinds were kept with the companies, there I think profit growth could see a bit more moderation and move more towards top line. But I think there are spaces where a lot of those input price tailwinds, what eventually passed on to the consumer, and to that extent, the fact that the costs are now normalizing may not necessarily be a headwind for those sectors. So I think within sectors, I think autos, auto anchors, and paints is where I think the margin tailwinds going away could lead to profit growth kind of moderating next year per se. Sonam, is what I would put it.
You know, Prateek, the thing about FMCG is that stocks in general always command a very premium valuations. If 50, 60, 70 times earnings, they may or may not perform as they haven't done so over the last 12 to 18 months. But would you believe that, okay, this is still, it may be an expensive stock, but there is now some value emerging considering the rural recovery that you are seeing? Or if one may wonder that why would you want to bet on an expensive stock with no returns, you'd rather bet on an expensive stock that still gives you returns, say the defense sector or like the PSUs?
Yeah. Again, a good question, Ramas. See, I think valuation is a relative game. We have to look at what is expensive and cheap in the overall market context. FMCG stocks were expensive, yes, at a time when rest of the market was, trading at half the valuations. Today, if you look at it, large parts of the market, even the cyclical ones like defense, in some PSUs, and a lot of industrial companies, valuations have caught up. I mean, today we are at a stage where FMCG valuations and defense or industrial valuations are exactly the same. You have FMCG where earnings or demand is depressed, and on those ones where demand is running on the higher side. Now, eventually, both of them should converge. Given the relatively low valuation differential between the two areas, I would rather bet on a space where I see some green shoots and things bottoming out, because I think small improvement should lead to a much bigger shareholder return as compared to some sectors like industrials or defense, where expectations are running very high. And given the growth setup of exports and consumption being weak, it is very difficult to believe that the demand in that space could continue. So I think from a relative basis, the premiums that these companies used to command has come down quite significantly. And that's why I think the risk reward over here is far better compared to what it was, probably 5-6 years back.
That's right, because we've seen those kind of moves as well anyway in the stocks as well. Defense, PSUs have done so well, and FMCG just started picking up, and that's something that we're seeing today as well. So there's some recovery from the lows for some of these FMCG names. Prateek, last question before we let you go on this conversation. You spoke about how exports are not picking up as well. Do you think most of the demand drivers for these companies, not FMCG, but the other names that you've spoken about, will be largely domestic?
Yeah. So I think that is what I think is somewhat beneficial, that for the other sectors in the consumer space, demand is more domestic oriented and also it is less cyclical. So I think the downside from that perspective is limited. I think the exports recovery will, if it happens, I think will further aid some of these companies because there will be spillover effects on consumption and so on and so forth. But I think the problem is that the contraction, the drag from the weaknesses behind, the recovery is still getting somewhat delayed. But nonetheless, I think this is a set of basket where I feel downside is quite protected. And if there is recovery, I think this is probably the next phase where recovery should happen. And there could be upside that can potentially come through in this space per se. So now.
All right, Prateek, thanks a lot for joining in, sharing your views on the consumption space in general and some sectors that you are positive on as well. Prateek Parekh there from Nuvama sharing his views on the consumption basket. Meanwhile, there were some flashes on your screen with regards to Tata Motors, and they plan to increase their prices of their commercial vehicles from July of 2024. They plan to increase the prices of their commercial vehicles by around 2%. Now, this is due to offsetting the impact of the rising commodity prices is what Tata Motors is saying. There you can see the flashes on your screen. Plans to increase CV prices by up to 2% from the 1st of July. Remember, Tata Motors had increased their commercial vehicle prices earlier this year as well. They had announced in March this year that they plan to increase their CV prices by 2% starting the 1st of April of 2024. And in addition to that, now this another 2% price hike has been announced, Sonal.
Okay, all right. So that's about Tata Motors. The stock absolutely flat with some negative bias right now. We'll slip into a break. When we come back, we'll get you a status check on monsoons all over the country. So stay tuned for that.
5x. So the collective valuation of these businesses as of the last fiscal year is 4.2 billion now, and our target is to get to 17 to 20 billion from these growth gems that we have.
If pockets like banks, metals, pharma, FMCG have a lot of value and technical strength and can be bought even at current prices. I think banks is really one place to be in because the risk reward is excellent. And my fundamental analyst tells me that from a valuation perspective, banks are still quite cheap. So yes, banks could be one of the trade of the next 3 to 6 months. Risk reward is excellent, valuations are good, and the money is flowing in because people are coming out of a phase of underperformance. The likes of Power Grid, NTPC, NMDC, ONGC, SAIL, NALCO, I think all of these stocks have a lot of headroom on the upside and can be committed into even at current levels. But I think since a lot of underperforming stocks and sectors are making a comeback, I think fertilizer looks very interesting. Paper looks interesting. The entire auto ancillary space, looks very, very interesting. Sugar has made a very good comeback. Focus on these pockets and I think you will be rewarded with a very good risk reward. I think it's the kind of market where you don't need to apply your mind too much. All you need to do is just to control your emotions. I think that's the kind of bull market that we have been in for the last 6 to 8 months because every single dip has been bought into beautifully. Local and global developments have been handled wonderfully. And I think the market is as strong as ever. As a technician, I always look out for overbought signals or topping signals. But even at current levels of 23,500, I don't see any such signals on the charts. In fact, after what happened on June 4th, I do believe that the market is internally and structurally even more stronger. And I think we are going to see much better days ahead and the best is yet to come.
Back with us here on Trading Hour, some slight recovery coming in for the Nifty from the lows of the day. It's just 0.2% lower now, 50 points down on the Nifty. Fighting to hold that level of 23,500, which it eventually broke out of after struggling to cross those levels almost throughout last week. And now the bulls are fighting to defend 23,500 on the Nifty. The Bank Nifty, though, continues to hold on to the gains, about 1.2% higher, still above the mark of 51,000. But let's shift focus now to the commodity space, and Manisha Gupta is now joining in. Today we are focusing on the monsoons. Manisha, good morning. The rains have finally arrived.
Well, they have, but the month of June doesn't seem to be ending so well. So when you look at the numbers from 1st to 18th of June, overall India, we are looking at 20% below normal rainfall. Clearly, Maharashtra, Gujarat, various areas in central India, North India haven't even seen much of rain happen. It is still a condition of heat wave for many of these states. So when you look at the overall numbers itself, for the month of June, the IMD has said that the rainfall would be between 92 to 108%. Now, this is exactly the criteria that you have for a normal rainfall. Now, with 20% below normal, we are perhaps looking at 80% at this point in time. Even if the rainfall does pick, the expectation is that you could be looking at June ending in a bit of a deficit, so below normal rainfall for the month of June. Well, yes, going forward, there are some upticks that we've seen in sense of numbers, including Maharashtra and Mumbai as well. Now, this is the chart that tells you on where and how much rainfall have we seen in sense of geographies there. So Northwest is the one that has seen most deficient of rainfall, minus 70% at this point in time. Northeast at minus 15%. Central India, which is the grain bowl of India, is also staring at minus 31% in sense of deficiency. The only geographical space that has seen rainfall, and a good one at that, has been South India with more than 16% of rainfall above normal that is happening there. As far as the heat wave situation goes, the IMD says that that will continue until 19th of June, especially in areas like Punjab, Haryana and Chandigarh and Delhi as well. After 20th is when you will see 3 to 4 degrees Celsius decline or drop in sense of temperatures, and even some thunder showers and small rain happen into these areas as well. So expectation is that as the La Nina is entering, the month of July and August will see better monsoons, but the month of June, as I said, could be looking at deficient rainfall.
Okay, all right. I can't believe we are here on 19th of June and still talking about heat waves in some of the parts of the country. But Manisha, thank you so much for always getting us all those updates. So that's the monsoon update, minus 70% in Northwest. That's a big decline that we are seeing, or at least in terms of numbers, it's not looking so good. But time for a short break now. When we return, we shift focus on some stocks which are moving. We'll get you more details on that one. Stay tuned.
Mr. Shah, we've got a fair bit of numbers and we've got a sense of the businesses as well. But I think let's, get a little bit more into knowing you. I think Nimish...
We'll do a quick rapid fire with you before we let you go and your team go. Okay, let me start with my first question, which is the one business leader that you admire, but you can't opt for Anand Mahindra. So beyond your group, if you want to, if one business leader that you admire.
No, in this case, I would go for Anand Mahindra because of a number of reasons.
No, it's not. I understand it's not an obvious choice. Of course, you admire him, but okay, beyond Anand Mahindra, if you want to choose one business leader that you admire more.
I would say Satya. He's done a fantastic job. He came in at a tough time, and he's really built a company well and set it up very well for the long term.
All right. What about your favorite sport and what are the prospects of India winning the World Cup?
I have two favorite sports. I can't give you a direct answer on this. One is cricket, of course, that is an all-time favorite. But the second is American football, because I spent many years in the US as well. So both have a very high degree of passion. Our chances of winning are very high if we play as one team. That's the most important part.
You spoke about you travel a lot. If I want to ask you your favorite destination, whether it's India or abroad, what would you choose? And of course, again, you can't choose Mahindra
My
Holidays.
favorite destination is Spain.
Okay.
Welcome back. You're still tuned into Trading Hour, and while we are talking about Bank Nifty being the star for the day today, a couple of these big names, be it ICICI Bank, we have HDFC Bank, Kotak Mahindra Bank, all these stocks should come up for you on the screen. These are the ones which are lending support to the Bank Nifty and ultimately, of course, to the Nifty, which is staying above that 23,500 mark for now. In the broader markets, otherwise, look at something like a Delta Corp, because that stock has surged 16.5%. Some updates with respect to GST which are expected, but of course, these are still to be seen in its full finality. There is no confirmation here. 16.5% higher on Delta Corp. We also have Amara Raja that continues its up move, so that stock is up around 2.5%. So a lot of moving parts in the broader markets as well. And this is a day where we have seen a lot of block deals and a lot of QIPs, a lot of fundraise as well. Hormaz, you are tracking some of the block deals that happened.
A couple of them, actually 4 of them took place today. A couple of them, one of them was ZF Commercial, which was announced last evening. And here we saw somewhere around 7.5% equity change hands in the block deal, somewhere close to 14.5 lakh shares. And they were valued at close to 2,300 crore rupees. So a big block deal that took place there on ZF Commercial. Wabco Asia was supposed to be the seller in this transaction. They were supposed to sell around 5% of the total equity at somewhere around close to 15,000 rupees. And they, as of the March quarter shareholding, had 75% stake. So 5% stake sale here will bring that down to 70%. So that is one of the block deals that we are tracking, ZF Commercial. And the other one is Sansera Engineering, and that was the one that took place earlier this morning as well. And here, now there were 2 entities. You can call this a clean out trade as well, because 2 entities that were supposed to sell close to around 11.5% stake in this transaction. And those 2, as of the March quarter shareholding, had the exact amount of stake that they were supposed to sell in this transaction. So you can call it a clean out trade. Around 11.5% equity, 62.5 lakh shares changed hands there, value at around 750 crores. So, and the stock reacting positively to that as well. So 7% higher for Sansera Engineering. The stock is at a record high. So good going there for Sansera as well.
Okay, all right. So these stocks higher in trade today. But the other stock that has been in focus for a while, Indus Towers, that stock is lower in trade today after sources are suggesting some stake sale that has happened by Vodafone Idea. For more details, Nimesh is joining us now, and the analysis as well. Nimesh.
Well, so there is a confirmation now that Vodafone has indeed sold almost entire stake in Indus Towers. So they've sold 20% stake is what the confirmation is via block deal today. We had an understanding and an inclination that maybe the existing large shareholder, which is Bharti Airtel, they would have bought in today's block. There is a confirmation on that as well. So Bharti has actually confirmed to the exchanges that yes, they've bought 1% stake in Indus Tower in today's block deal. I understand there was a technical reason they couldn't buy beyond 1%. So now Bharti Airtel's stake is close to 49.9%, and they need CCI approval to go beyond 50. So that's the reason why this took at around they bought 1% stake. In terms of other buyers, I understand one of the leading domestic mutual fund was an anchor investor. Within FIs, some hedge funds have also bought in today's block deal. So disclosures could be quite interesting as to who are the other buyers in today's block. Now, post block deal, because the promoter holding is going down and there is a free float increase, you will see the weight going up in the passive indices as well. So the expectation is in the next few days you will see in MSCI an inflow of close to $100 million, and in FTSE there could be an inflow of close to $57 million because of this free float change. So deal done. Vodafone has sold 20% stake. Bharti has bought 1% stake, and now there's going to be in the next few days some free float adjustment as well, which will lead to further inflow. So that's the broad data and inputs as far as the Vodafone block is concerned.
Very interesting, Nimesh. Thanks a lot for that. And it'll be interesting to see, as Nimesh was highlighting, the others who have been buyers in this transaction, other than Bharti Airtel, of course. Now, the 1% stake that they bought has now taken their stake past 48%, close to 50 now, is Bharti Airtel. Indus Towers down 4.5% in today's trading session after the block deal. But let's look at some of the other stocks. It's a day of block deals, as we were just mentioning. The other one that took place today is in Gland Pharma, and that is also a stock in focus, and also is Prestige Estates, and the company is now considering a fundraising via QIP, and Ami Organics is also launched a QIP. Vivek is joining in with all the details. Vivek, what do you have for us?
Well, that's right. Like you mentioned, it's the season, it's the day of block deals, fundraising and QIP. So the first one, like you mentioned, is Gland Pharma, the promoter entity, Fosun Pharma, that's been looking to hive off its stake. However, there have been multiple attempts, number one, made to sell the company. Number two, they've also been trying to sell a bigger chunk. But today what's actually happened is that a little over 5% equity changed hands, and we understand that Fosun Pharma, we had access to the term sheet. UBS was the banker to this particular deal. They held 57.86% stake, so they've paid a little over 5% stake in today's block deal. The second company on the radar is Prestige Estates. Now, when you talk about Prestige Estates, remember there are two separate pieces of news that the company has put out to the exchanges. This is, something that they will be putting up for consideration at the board meeting on June 21st. Number one, the company itself is considering fundraising. This the route could either be via the QIP, the rights issue, or the preferential issue route. Now, the second, piece of information that the company has given to the exchanges is that in the hospitality segment that the company operates in, they could be looking at a fundraise, and this could be done via either a primary or secondary issue of shares. What we understand from our sources, something that we reported last week, is that they're going the IPO route, and this is something that they will need the board nod for. The last company on the radar is Ami Organics. Again, this particular company looking to raise close to 400 crore via the QIP route. We understand that almost 8.6% of the total equity dilution is what the company is targeting at, and the indicator floor price for this particular fundraise is close to 1,240 rupees a share. Debt repayment, capex, and working capital expenditure is what the company will be utilizing the funds for.
Okay, all right. Thank you so much for joining us with all those details, Vivek. Ami Organics, the stock is up by 7.5% this month itself. That has seen a gain of around 15% so far. Let's move on now, because there are a lot of other stocks on our radar as well. Zomato shares are surging. This is on the back of a note from UBS. Manglam is joining us with the details of that note. Up 5% on the stock now, Manglam.
5% on the stock right now. The street is sussing perhaps, the announcement of the deal may perhaps come in the very near future, and that's exactly what the price is telling you. Remember, over the weekend there were reports that the company is looking to go ahead and buy Paytm's entertainment business, which is Paytm Insider, NH7 Weekender, and a couple of these fests that Paytm had bought way back in 2018. And the deal reports were, suggesting the size could be anywhere between 1,500 to 2,000 odd crores. To that, both the companies said yes, they were in talks, and as a result of which there was no binding arrangement that was reached at yet. Brokerages have taken note of that, and UBS is saying that Paytm's ticketing business does fit in well with Zomato's going out offering. Remember, Zomato has over 12,200 crores of cash on their books, and 1,500 crore in this inorganic acquisition would be good for them, especially because the going out business of Zomato is very small as compared to all the other parts of their business. Did just about 258 crores of revenue in FY24, and they aspire to grow that business pretty fast as well. And as per UBS, back of the envelope calculations do suggest reasonable valuations at around 1,500 odd crores. So what we need to know is, one, when the deal is announced. Secondly, once the deal is announced, what could be the addition to Zomato's revenue, and the synergies, more importantly, in terms of scale, is something that we will be keeping an eye out on. They haven't tweaked their estimates yet. They have a buy rating with a target of 250. What brokerages add to their estimates of Zomato post this deal also would be an important imponderable to watch out for. But the price is telling you that the deal perhaps may be in the offing.
You know, the one thing that Zomato has also delivered other than food and groceries is gains to shareholders, Mangalam, and that is what is showing in the price as well, almost nearing 200 now, up 60% so far in 2024 and 160% in the last 12 months is Zomato. So good going there as well. But time for a short break here on Trading Hour. Up next, we'll discuss trading strategies. Mitesh Thakkar will join in on the other side with his top trading bets. Stay tuned.
Culture, love the joy for life that the people have there. Just a wonderful place.
And if you recommend one book that you would meet someone and tell them you recommend to read that one, which one would it be?
I'd recommend a P.G. Woodhouse book, Leave It to Smith.
One favorite car, if I want to ask you. Again, you can't mention M&M, but beyond M&M portfolio, if you want to choose one car, what would be that?
That has to be M&M. So there is no going beyond that.
I've always seen you, in a very formal attire with tie and everything. But if been asked, what would be your favorite thing? A casual wear or a formal wear?
Casual, of course.
Okay. Why can't you bring that culture into M&M as well? I mean,
we shall take that back for consideration.
Bollywood or Hollywood?
Bollywood.
Favorite picture?
Favorite picture would be Kabhi Khushi Kabhi Gum.
Okay. Finally, one trait that you think a business leader should have or should possess. What would be that?
The ability to connect with people and to be able to understand what their views are. And that's not just the team, but all stakeholders.
The skin can fall prey to a host of afflictions, from the common agony of acne and the persistent itch of atopic dermatitis to the silvery scales of psoriasis.
Welcome back, and time for an exclusive now on the upcoming GST Council meeting. Sources are saying that the Fitment Committee has called for the proposal to cut GST on fertilizers to be rethought by the Standing Committee. Timsy is joining in with more details. Timsy, what are your sources telling you?
Well, that's right. What we are given to understand from sources is that the GST Council nominated Fitment Committee has recommended that the group of ministers on rate rationalization should consider the proposal to cut GST on fertilizers and several inputs of fertilizers. In case of fertilizers, the demand from the industry is to cut rates from current 5% to 0. What we are given is that the Fitment Committee's view is that the blanket GST exemption for fertilizers, chemicals and nutrients will actually cause inversion of duty, and thus it could lead to blocking of capital for the industry. However, the Fitment Committee also said that they strongly recommend the views given by the Standing Committee on chemicals and fertilizers to reduce this tax limit, and thus a group of ministers is actually now referred to look into this matter. That is the group of ministers on rate rationalization. Let's see what happens finally when the council meets.
Yes, in anticipation of that meet, a lot of these fertilizer stocks are buzzing trade. But Timsy, stay on. You're also picking up that there might be some discussions over retrospective GST action in the upcoming meet. Tell us more about that.
Well, that's right. What we are given to understand from sources is that the GST Council is likely to bring an amendment in the GST rules where it says that sectors which paid GST at lower rate as against that was applied by GST authorities, they are likely to get relief from the retrospective action that the government has taken against them. GST Council may consider a proposal to levy higher GST rate when the lower rate was paid due to general trade practice and in absence of any clarity of the particular rate. Also, what what we are given to understand that given this, the council is likely to consider not to raise such retrospective demands where industry paid lower GST rate in this absence of clarity. However, the amendment will also say that the GST law is not going to allow refund of GST or cess arising in cases where a higher GST was paid earlier and later on the authorities have actually revised it downwards. So that could be a silver lining for the industry, and yes, experts say that this could pave way for online gaming, so that the government is able to say that the retrospective demands that have been raised against online gaming, which could be as high as 1 lakh crore rupees, that could actually come through this clause and this could get breather. But yes, this is what experts say. Let's see what council actually does. Back to you.
Timsy, thanks a lot for all of those updates. All eyes on the GST Council meeting. But gold jewelers, stocks like Kalyan and Senco are continuing to shine after brokerage firm Motilal Oswal initiated coverage on these stocks. Mangalam is back with us to fill us in on why brokerages are confident on these jewelry companies. Mangalam.
Well, a couple of reasons why they're confident is because, jewelry market has seen a strong trend of formalization itself. The organized market in jewelry is currently around 36 to 38%, and this number was just about 22% in FY19 itself. In fact, Motilal Oswal has plotted the growth of the industry and the organized industry along with the top players in the last 5 years, and they found out that in the last 5 years, the jewelry market grew at a compounded rate of 8%, whereas the organized players grew at 18 to 19%. If you look at Titan, Senco and Kalyan, they've actually grown upwards of 20%, saying that they've gained market share, and that is what makes them optimistic about the jewelry category, and they anticipate ongoing rapid shifts in consumer purchase behavior. In fact, a lot of the players are backing growth via the franchise route, and the franchise route not only is asset light, also enables faster reach. So those are a couple of points which make them positive on this space itself. They've initiated coverage on Kalyan Jewellers and Senco Gold with a buy rating. The targets that they have, 525 for Kalyan and about 1300 for Senco. They valued Kalyan at 45 times, Senco at around 35 times. And on the industry leader, which is Titan, they reiterate their buy call. Not a big change here, but 4150 is the target price, and they valued this company at 65 times FY26 price to earnings, which is at a steep premium to all the others like Kalyan and Senco itself. The only couple of risks, the first one is gold price volatility, and second, there could be some pricing pressure in making charges due to intense competition. So those are a couple of factors you need to keep an eye out on. Otherwise, it is sparkling for the sector.
Sparkling for the sector, and that is something we're seeing in Kalyan Jewellers and Senco for now. But Mangalam, hold on, this is a consumption day for sure. Tell us more about Varun Beverages. It is in focus on the back of a CLSA note.
That's correct. So Varun Beverages is actually in focus on the back of a CLSA note. But CLSA actually believes that, the company is a compounding machine. That's not all. When they look at, the target price, they've increased it to just sub 2,000 rupees, 1977. And they've raised the target multiple from 48 times to 59 times. And that's caused the raise in their target price itself. They believe that increased affordability, new territories that the company is in, and products are the ones that will sustain the growth of them. In fact, deeper distribution with affordable price points for new products will also do well for them. And we've seen the kind of growth that, the new energy drink Sting has made for Varun Beverages over the last 2 years or so. And that is what we've seen in the kind of stock price move. And acquisitions will keep the growth engine humming is what CLSA believes. And as a result of which they're positive on the stock. The stock currently not zooming, but remember in the past it's been a big mover, and the ratings upgrade or the price upgrade has come in via them increasing multiples and not as much earnings. So which is why maybe we aren't seeing an immediate impact of that. Going forward we will. As you can see on your screens, the last 12 months the stock has doubled. If you look at the previous 12 months as well, it has doubled beyond that as well. So it's a big mover, big wealth creator, and CLSA believes there's just room for more.
Fabulous compounding machine indeed. Mangalam, thanks a lot for that. Was Varun Beverages there, Motilal Oswal initiating coverage and a price target of nearly 2,000 rupees on the stock. But back to the markets then, the Nifty continues to fight to hold on to that 23,500 mark, and Mitesh Thakkar is now joining in for a quick technical check on the markets and some trading bets as well. Mitesh, good morning. Thank you for joining in. Is it time now to see some bit of profit booking on the Nifty now that we've made another high today? Or do you feel that 23,500 is a very strong support, or any dip should now be used as a buying opportunity?
Morning, Hormuz. I think, I'm actually now wondering whether should I book profits and whether should I trade my stop loss aggressively. So I think the answer is that maybe profit booking isn't the best idea because we've seen the market make new highs, but tightening your stop losses or trading them aggressively is a good way of trading in this market, which is, which is yet to which is yet to violate the sequence of higher highs and higher lows. So I would suggest 23,000. 380 as my spot level on the Nifty for my trading stop loss, and as long as that is not being taken out, I would want to hold on to long positions. And the other thing is that the bank Nifty is now nearing its previous all-time highs of 51,130, and we are just a few points away from that. So if the bank Nifty can give a breakout and into fresh territory and show more momentum, because a lot of banking stocks have fired buys today, then I think the Nifty would also do well. So that is why I'm not wanting, I don't want to book out because there's a chance of the bank Nifty, adding momentum to the Nifty. So we'll hold on with a slightly tighter stop loss.
Okay, all right. And in that tighter stock list, what would your individual picks be, Mitesh?
So one from the banking name Rima, put a bank as a buy, keep a stop at 1720, look for targets of 1780. And then the broader market, Zensar Tech has given a fresh swing breakout. So that's a buy with a stop at 710 for targets of 760.
All right, Mitesh, thanks a lot for sharing your views on the index and some trading ideas as well. Mitesh Thakkar there with his trading ideas. Time for a short break. Up next, we throw the spotlight on the real estate space and discuss the 17 emerging real estate hotspots in India with Badal Yagnik, the CEO of Colliers India. Stay tuned, back on the other side.
And the fiery torment of shingles.
Fairness creams, which are a combination of the steroid with this hydroquinone, which leads to not only thinning of your skin, but an ashy kind of dermatosis, which gives you this grey skin look. And by the time they come to you, the damage is actually to such an extent that it's almost impossible to repair it completely.
Psoriasis is a chronic inflammatory disease, and it's more than painful. I think it's an uncomfortable disease. Sometimes it's not treated adequately, and it's important that in all cases, first of all, you must have a dermatologist.
This is India's election headquarters.
As the verdict emerges, the markets will react,
Bringing market movements into sharper focus with the most authoritative insights.
Once the exit polls were out, we saw the Sensex going up by 2,500 points.
In this pessimistic environment, there is a lot positive also. Please don't underestimate the 8% momentum in the economy.
Exploring election breakthroughs from the newsroom to the field.
The numbers have changed significantly in the last few minutes, even as far as UP is concerned.
Things are not looking very good for the ruling regime at this juncture.
Of course, things are changing, but it looks like a formidable victory at this point in time as far as the NDA is concerned.
Harnessing the power of over 25 years of world-class.
Welcome back. You're still tuned into Trading Hour on CNBC-TV18. Now, well, let's talk about an interesting report now. Colliers has identified 17 Indian cities as the high-impact emerging real estate hotspots. In the latest report, they say that the emerging cities will play a key role in India's growth trajectory, and also adds that India is expected to have nearly 100 cities with a population of more than 1 million by 2050. Badal Yagnik, the CEO of this company, is joining us now to take a few questions on the report. Mr. Yagnik, good morning. Thank you so much for joining us. Well, it's an interesting report where you've mentioned 17 out of the 30 high potential cities in India. First, if you can name them and tell us what is making you so confident of them seeing that high growth trajectory. What are some of the factors that you're looking at?
Yeah, thank you for having me on the show first. So, yeah, I think so. We did a complete immersion to this research. And, as we talk about India getting to the third largest economy by 2030, today we see close to about 6 cities in India, which is the mega cities which have been taking most of the bulk. But we see primarily 4 factors which are driving our analysis. The first being the change in the workspace, the way the change of landscape of the work is happening, the infrastructure growth happening in various, corridors of the country, tourism, and more specifically spiritual tourism, and increase in digitalization because of the penetration of the internet. So these are the factors. To name the cities, primarily they are all spread across the country. 4 in north being Amritsar, Ayodhya, Jaipur, Kanpur, Lucknow, Varanasi, and east Patna, Puri. West we are talking about Dwarka, Nagpur, Shirdi, and Surat. South Coimbatore, Kochi, Tirupati, Visakhapatnam, and in the center part, Indore. So these are the 17 cities. Just to put a caveat to this, we are not saying these are the only cities which will be the emerging cities and growing. This we are saying will have a rather much accelerated growth to the other cities. And primarily we come from the fact that, we are seeing a very clear decentralized work environment, and the occupiers which we have been speaking to, most of them, are talking about these tier 2 cities. Just to give you a very classical case, 2 cases, Pune being one of them, which started about 10 years back, is a vibrant city. It was not a city for commercial real estate. Today, it's a thriving city among the top 6 cities in India. The other being Noida, which started in the early 2000s, and now, it's again one of the vibrant cities competing the major cities across the country. So, the decentralized workforce, and what we've seen in our analysis, close to 15% of the tech talent is coming from these emerging cities. Of late, we've also seen a lot of these premier institutes like the IITs, IIMs, AIMS, NIFT, all these coming up in these emerging locations, which will aid to the talent dispersion and, acceptance of those cities as emerging cities. And it's very important for us to have these emerging cities grow, as for a country which becomes the 3rd largest economy, we need more than 6 cities which are vibrant. So 17 cities have been identified, but the sectors which are there are totally different for the real estate asset class in which they will develop. So some would be more on the office side, some will be the warehousing spaces, the others would be tourism, residential, senior living. So different factors for different cities.
Right. Mr. Yagdi, good morning. Thanks a lot for joining in. Actually, my question was somewhat related to Pune, since you mentioned that, since you've highlighted Coimbatore, Indore and Kochi, and amongst others who have emerged as locations having high potential in the satellite office market. Now, what gives you the confidence that these are the cities which have the potential for this satellite office market? You are alluding to Pune because now Pune also has a very thriving IT ecosystem. What gives you the confidence about these 3 cities?
So just to answer you first on Pune, Pune now is no more a satellite town, and that's the whole idea of the report. It's a vibrant, mega city, the way we call it, and it no more forms part of the satellite town. It's close to about 80 million square feet of commercial real estate state and a thriving, industrial as well as a residential market. But Coimbatore and Kochi primarily. Both these cities are on the radar of most of the corporates. They have quality real estate. And both of them have seen traction of grade A occupiers occupying space in these cities. Indore still is a distance from there, but Indore forms a very interesting hub for the logistics space because it is very central to any locations in India.
Okay, all right. You've also, as you mentioned earlier, categorized these cities into different baskets. What would work for these cities? I wanted to understand, and something that we have spoken about in the last couple of months is spiritual tourism, and that is something that is leading to higher travel, definitely, but definitely leads to development as well. What are some of the potential names here, and if there's something out of the list as well that you've shared with us that could benefit, and what kind of benefits that we'll see there?
I think so. That's a very interesting question. And, spiritual tourism for the domestic tourism forms the largest part of tourism. It is way in above of 50% of our, tourism industry. If you look at it, it was close to about a 44 billion kind of a market, the spiritual tourism way back in 2020, which is now increased to about 60 billion. And we see that this will keep on increasing by close to about 9 to 10% every year. So classical case here is Ayodhya. And we have seen a lot of hype which has happened on Ayodhya, infra upgrade which has happened, roads leading to that, airports, trains, good connectivity. And the outcome has been that most of the large, commercial as well as residential occupiers, developers have taken space there. We are talking about 1,800 keys, which will be delivered in Ayodhya by 2027. Land prices have shot up by close to 170% in the past 2 years. So this is one example of a city which was provided the impetus grew. So we are definitely seeing cities like Amritsar, Ayodhya, Dwarka, Puri, Shirdi, Tirupati. To give you an example, Tirupati, Amritsar, Shirdi, these attract close to about 30 million plus footfalls every year. And once you go to the other ones, they are in the early teens. So this definitely, with the country growing, with disposable income coming, this definitely will have a lot of impetus, provided we have these kinds of infrastructure and connectivity issues solved for these, spiritual tourism destinations.
All right, Mr. Yagnik, thanks a lot for sparing time and joining in to share your views on these emerging real estate hotspots there. Badal Yagnik of Colliers India on the emerging real estate hotspots. By the way, Sonal, the Nifty has recovered all of its losses, almost about to turn positive now. Is the index now back above the mark of 23,550, almost there. It was down almost close to 20 points. We started the show somewhere around 50-60 points lower on the index. It's been a sharp recovery from the lows of the day. There you can see HDFC Bank, ICICI Bank leading the recovery, IndusInd, Kotak Mahindra Bank as well. And so index heavyweights, particularly the banks, contributing to the recovery.
Actually, also some of these IT names, if you look at Infosys, that is at the day's high right now. You have Tech Mahindra, which is also surged from the lows of the day. So just keep an eye out on the IT space as well. That has been seeing some profit booking in last couple of trading sessions. Now there's a comeback that we're seeing. As I said, Tech Mahindra also doing well. HCL Tech is also attempting for seeing some recovery from the lows as well. So we'll keep tracking that for you. Definite recovery in the markets that is underway. Time for a short break. When we come back, we'll get you more on the markets on the other side. Stay tuned.
Journalism.
You're getting all of this analysis live from the CNBC-TV18 election headquarters.
CNBC-TV18 emerged as the clear leader on television and YouTube on election counting day.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC TV18 and CNBCTV18.com. The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to
Testing.
Welcome back. We're comfortably above the 23,500 mark on the Nifty. Recovery is underway, though again it has fallen slightly from those levels, but nothing to complain there. Now if we talk about some broader market movers, sugar stocks have started surging again. So Balrampur Chini is the one that should be on your radar. 3% higher on that one. The stock has surged from the lows. And the other name that we have spoken about earlier as well, and some of these, of course, fertilizer names. So Chambal Fertilizer should be on your screen. 7% higher on that one as well. There is a big surge in sugar stocks suddenly. There have been talks of some price revision. We'll have to see whether that happens or not, because some of the analysts suggested that that is not something that they're expecting immediately. But earlier today, we spoke to Manish Sunthalia of MK Investment Managers. Let's listen into his view on the market going ahead and the key budget expectations.
Overall, I think the direction remains positive. Only thing to watch out for is that for the next 6 months point of view on a fundamental valuation basis, the Nifty 50 looks to traject another 5 to 6% or 5 to 7% at this for the next 6 months. So the main action is going to be in certain sectors, the broader markets as a whole. I'm not talking about the extreme small caps or the micro caps, but yeah, the mid caps and the largest mid caps or relatively, decent market cap mid caps are the areas where the action was likely to be. I think direction remains positive. Overall, I would say that in terms of the IT space, we would reckon that the second half of this year or the first half of next year, clearly there should be some sort of pickup in the IT space in India. Plus now they're actually, converting a lot of their operational creditors dues into equity. So I think, tariff hikes clearly is the need of the hour. We have had it too good for too long. It's around the corner, and all the three players must, act in sync. But anything like 10 times EV to EBITDA on FY26 numbers, you'll have some reasonable upside even from these levels. Of course, in the budget, the thing to watch out for would be how much of the money is left in the hands of the average households. So consumer durables, and consumption and consumer discretionary side of things, whether it be your two-wheelers or whether it be your health, pharma, and all of these things will see some sort of, extra attention than what these sectors have got so far.
All right, some flashes on your screen that's related to the Indus Towers block deal, and Vodafone PLC has put out a statement and they're saying that they've sold close to 48 crore shares in Indus Towers. Pull up Indus Towers, that's the stock we'd want to talk about, 4.5% lower currently, but Vodafone PLC has sold 48.4 crore shares, representing 18% of the overall equity, and they're saying that the proceeds from this stake sale will be used to repay its existing lenders. Now remember, as of March, Vodafone's the Vodafone Group, the Vodafone PLC, not Vodafone Idea, the Vodafone PLC's overall borrowing that was secured against Indus Towers stood at around $1.8 billion. So they're saying that the proceeds from this stake sale will be used to repay its existing lenders, and Indus Towers is one of them, and the dues that they are. So a lot of brokerages also came out with notes yesterday and said that if that happens, they would use part of those proceeds to repay Indus Towers, and the remaining may be infused into Vodafone Idea. So statements coming in there from the Vodafone Group. They sold 48 crore shares, 18% of the overall equity. The actual number is around 22%. So it'll be interesting to see who was the other sellers in the transaction. So Bharti Airtel is one of the buyers. And so it will be an interesting data point to remember to see when the data comes out in the evening as well.
Oh yes, so and it's a big deal that we have been covering since the word go. But with that, we'll do one thing. We'll take your leave on this edition of Trading Hour. Stay tuned. Halftime report comes up next with all the market action.
From consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Great way to celebrate our own 25th year with new milestones being achieved on the Lal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high. We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC-TV18, embarking on a quarter-century of excellence.
CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
Stocks take a leg down across the board after scaling a new high on likely profit taking, though they recover from lows. Realty and telecom are the bigger drags, even as financials are the ones which are eking out big gains.
Vodafone PLC has sold a nearly 18% stake in Indus Towers, leaving it with just about 3% in the telecom towers company. Vodafone says that proceeds from Indus Towers stake sale will be used to repay existing lenders.
The street sees a rush of block trades worth nearly 25,000 crores. Beside Vodafone big trade, large block trades also get executed in Gland Pharma, ZF Commercial, Sansera Engineering and AU Small Finance Bank.
Prestige Estate says it will consider fundraise and monetization of its hospitality business in a board meet. Mrs. Bector's Food will also weigh a fundraise proposal at its upcoming meet. These even as AMI Organics and Craftsman Automation launch QIPs.
Crude climbs to its highest level in 6 weeks, with Brent scaling $86 per barrel. As summer demand leads to a drop in inventories, China reports strong retail sales and geopolitical tensions escalate.
Hello and welcome to Halftime Report. I'm Ekta Batra, with me is Manglam Malu, and it's turning out to be a session which is quite mixed. So we are off the day's high for all of the indices rather. But remember that we are already sitting on record highs, so it's okay to see some amount of profit taking. We have the mid-cap index, which is down around 0.7%. The advanced decline ratio, or the breadth of the market, is in negative terrain, so that just corroborates what we are seeing in terms of the mid-caps. The Bank Nifty is holding with a gain of around 1.2%, record highs there, and the Bank Nifty outperforming as compared to what we are seeing for the frontline indices. Overall, yes, profit booking on the screen, but no complaints, Manglam?
No complaints whatsoever. In fact, if anything, the good part is that despite the profit booking, we saw a recovery from the lows. The options data did suggest that there could be support around that 23,450 mark on the Nifty, and that exactly corroborates with today's low as well. So from today's low, we've actually seen a near 90-point recovery on the Nifty. The Sensex is back in the green, and we have the Nifty Bank, which continues to do well, even as it is about 70-80 points away from the record high that it hit earlier in the morning. The second half of trade will have Nifty Bank more importantly in focus, largely because one, it is a Wednesday, it's Nifty Bank weekly options expiry, and secondly, HDFC Bank, its largest constituent, is doing extremely well in today's trading session, supporting the frontline indices, and giving it company is actually ICICI Bank and Axis Bank as well, both of them doing well in today's trading session. Cash market volumes extremely high today, and that's largely because a lot of block deals that happened as well. So in the second half of trade, what happens to the mid-cap index and the Nifty Bank is something we'll be closely eyeing, because US markets are shut for trade today on account of the Juneteenth holiday. But speaking about the block deals itself, a massive number of them that took place, Hormaz joins in with a roundup of all of them. Hormaz.
A couple of them that I would want to highlight in particular. The first one being ZF Commercial, that took place in today's trading session earlier in the day, and that is where around 14.5 lakh shares, around 7.5% of equity changed hands in the block deal. The total deal value is set to be close to 2,300 crores. Remember, we had reported yesterday, citing sources, that WAPCO Asia was planning to sell up to 5% equity in the company. Now, as of the March quarter shareholding, WAPCO had around 75% stake in the company, so they plan to sell another 5%. So we'll keep an eye out on who are the buyers and sellers in this transaction. And the other one that I wanted to speak about was Sansera Engineering, and that is where around 62.5 lakh shares, or close to 11.5% equity changed hands in the transaction today. The deal value is set to be around 750 crores. You can call this a clean out trade, because the two entities that were supposed to be selling their stake today had the exact number of shares in the March quarter shareholding as well. So you can consider that as a clean out trade. The stock doing well after the block deal, trading at a record high, but as you mentioned, it's block deal galore in today's trading session.
Absolutely, Hormuz. Well, in fact, let's talk about some more and other stocks which are in focus. We have Vivek joining in. He's going to apprise us of Gland Pharma, which is in focus on account of the block deal which has taken place there. Prestige, which is in focus as the company is considering fundraising. And Ami Organics as well. Vivek.
Well, that's right. It's the day of very large block deals, and Gland Pharma, Fosun Pharma, that held a little over 57.8% stake in the company, today paid close to 5% stake. They've been wanting to trim the stake as far as Gland is concerned for quite some time, but today one particular block deal going through. The second stock on the radar is Prestige Estates. Remember Prestige Estates, last week we told you about how the company was going ahead and proceeding with its IPO as far as its hospitality segment is concerned. Yesterday evening to the exchanges, they've given two separate pieces of information. First one, what they're saying is that the company itself, the holding company, would be looking for a fundraise. They could either use the QIP route, the pref route, or the rights issue. Second, confirming our development, they said that they will be looking at a fundraise even in the hospitality segment. This could be either via a primary or secondary issuance of shares. It'll be interesting to see, when does the actual IPO come to fruition, and also what will be the valuations that the company can garner from this particular value unlock that they are looking at. And lastly, Ami Organics, QIP over here, the company is looking to raise close to 400 crore via the QIP route. Indicative floor price is a 5% discount to yesterday's close. 1,240 is what the indicative floor price is. They were dilution of almost 9% of the pre-issue capital, and the fund usage will be for debt repayment as well as CapEx requirements that the company has envisaged.
All right, thanks a lot for that, Vivek. A bunch of stocks doing extremely well. The fertilizer/chemical related stocks, Deepak Nitrite, for instance, up around 4%, Coromandel up around 3.5%. The biggest recovery is what we've seen in the sugar space. So Balrampur Chini, for instance, was in the red for most part of today's trading session, has now recovered and moved to the high point of trade. And giving it company on the way up is Chambal Fertilizers with a gain of about 8%. But the biggest of all block deals today was the Indus Towers one, where it slumped after Vodafone has sold 18% stake in the company, a near $2 billion deal, $1.8 billion to be precise. Nimesh joins in with all the details here. Nimesh.
Hi, Mangalam. So as you rightly pointed out, the mother of all deal was indeed the Indus Tower block, where the Vodafone PLC has now confirmed that they've sold 18% stake via block deal. They've raised close to $1.8 billion. However, they'll be retaining the remaining 3% stake. They were owning 21%, and they've sold 18% in today's block deal. In terms of buyer, there is a confirmation now from Bharti as well that they have indeed bought 1% stake in today's block. So they will be close to 49.9% in Indus Tower after today's block deal. Among other buyers, I understand there were a few domestic mutual funds within that. One was an anchor investor, And within the FII, some large hedge funds have also participated in today's block deal. Now that the block is done, post-deal, there's going to be some adjustments in the free float as well. So there will be some, weight increase for passive investors. MSCI and both MSCI and FTSE will see these changes over the next few days. So their expectation is that for MSCI, the inflows would be close to $100 million. And for FTSE, as and when the changes happen, the inflows could be close to $55 million. So additional $155 million will be done because of the weight increase for passive investors. Now, as you speak, the deal is done. It's likely that Vodafone will retain the remaining 3%, but they've sold 18%. This also means that the big overhang of supply is now out of the way. So next focus will be on Vodafone Idea and whether any money comes to them. But far as Indus Tower is concerned, the deal done. Some large guys have bought, and now there will be passive money as well, which will follow over the next few days.
Okay, all right, Nimesh, thanks very much for that. So that's a big deal which has taken place and will be used, the funds will be used for debt reduction for Vodafone. Well, we'll take a short break, but we'll get you a lot more on the markets, a lot of stocks in focus at this point in time. All that coming up on the other side.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube.
These are businesses that have a great market position, in many cases are leaders in what they do. Some have been playing in smaller niches and we need to expand those. These are businesses that when we started this collectively had a market cap of less than $1 billion, and we set a target of each business to get to $1 billion. There are 10 of them. And as many got closer to it, as we often do, we raised that target further and said now we need to grow 5x. So the collective valuation of these businesses as of the last fiscal year is $4.2 billion now, and our target is to get to 17 to 20 billion from these growth gems that we have.
If pockets like banks, metals, pharma, FMCG have a lot of value and technical strength and can be bought even at current prices. I think banks is really one place to be in because the risk reward is excellent. And my fundamental analyst tells me that from a valuation perspective, banks are still quite cheap. So yes, banks could be one of the trade of the next 3 to 6 months. Risk reward is excellent, valuations are good, and the money is flowing in because people.
Welcome back. Well, for the markets, the Nifty just about flattened out as we speak. We have the mid-cap index, which is also recovered a little more from the last time we spoke about it. So 0.77% is the decline that it was showing, and now it's showing a decline of around 0.69% to put it into perspective. Well, let's talk about more stocks which are in focus. Zomato is in focus on the back of a positive note from UBS. Mangalam, lot of action taking place in Zomato.
A lot of action taking place in Zomato, and the note that is coming from UBS is also, taking note of this action in Zomato itself. The price move is telling you that maybe a deal is a deal announcement is in the offing. What is that deal? Both the companies, Zomato and Paytm, have told the exchanges that they are in talks for a potential sale of Paytm's entertainment business to Zomato, a business that will actually aid Zomato's going out offering. Now, what is going out business for Zomato. It's basically dining at restaurants or people when they use their Zomato to go out of their homes instead of ordering in. And Zomato has actually, looked to scale this business up itself. In FY24, that business did about 258 crores of revenue. Very little as compared to the overall scheme of things for Zomato itself, but this is a business which they believe can grow. And one of the reasons or one of the highlights of last year when it came to outdoor events was the Zomaland event that they did in multiple cities as well. Paytm Insider is the second largest ticket booking platform in the country. So if they do go ahead and purchase that for reported 1,500 to 2,000 crores, UBS's back of the envelope calculations do suggest that valuations are reasonable, and it will only aid Zomato's going out business going forward, and as a result of which it would be a positive. They have a buy rating with a target price of 250 on the stock, but they haven't added to their estimates of this acquisition yet. So once the acquisition does come by, the street will then start ascribing valuations to the synergies of scale, etc. And as a result of which, we'll also see a further round of up move come by on Zomato. A far cry from what would happen, say, 2 years ago when Zomato would go ahead, acquire a company, and people would bash them for entering into unnecessary adventurism. But this time around, they're saying 12,250 crores of cash on their books. Why not use it for growing some of their businesses?
Okay, all right. So that's the update coming in on Zomato. That stock holding up with a gain of around 4%. UBS target price stands at around 250. Let's see whether that M&A comes through or not. Thanks, Manglam, for that. Well, sources now tell CNBC-TV18 that the Ministry of Heavy Industries is looking to revamp the 2016 capital goods policy. Parikshit is here with more details on this. Parikshit.
One of the first decisions taken by the NDA 3.0 government was to begin work on a new capital goods policy. Sources say the Ministry of Heavy Industries has formed a task force to work towards a National Capital Goods Policy 2025. This task force is headed by Secretary Heavy Industries and has 17 industry bodies and 15 ministries as members. One of the key objectives is to review the shortcomings in the Capital Goods Policy 2016 and work towards a framework that can make India a global champion in capital goods. The government is considering ways to include new and emerging areas in manufacturing like automation, robotics, AI and Internet of Things. One of the key priorities is to promote export-led growth and reduce import dependence, and also focus on niche technologies and high-end technologies in India. Industry sources say India needs a new outcome-oriented capital goods policy, as the earlier one has not been effective in demand generation and promoting exports. CNBC-TV18 has learned that industry bodies have recommended a new policy which puts emphasis on machinery used in energy transition, as energy transition is a $120 trillion opportunity. The industry also wants clarity on how the 1 lakh crore R&D corpus announced in the budget will be utilized for the capital goods industry. The industry has told the government that while the current share of capital goods in India's manufacturing is 12%, there is a strong potential to take it to 25%, and a focus on capital goods can imports of capital goods or machinery used in manufacturing and become a key exporter. Currently, China is the largest exporter of capital goods, followed by Germany, US, Italy and Hong Kong.
All right, thanks a lot for that, Parikshit. So that's about the capital goods policy. But the markets now, the Nifty is in the green, and that's the breaking news of the afternoon right now. After recovering nearly 120 points from the lows, the Nifty is moved into the green, and that is courtesy the Nifty Bank, which is now moving once again towards a fresh all-time high. And what's also aiding this up move is the IT index. So if you just look at the IT index, you would see that it's just about inched into the green. So the Nifty Bank is doing well. The Nifty IT is supporting it right now, and as a result of which the Nifty has seen a strong recovery from the lows at the high point. So take a short break, come back. On the other side, we'll get in some trading strategies with Pritesh Mehta.
The skin can fall prey to a host of afflictions, from the common agony of acne and the persistent itch of atopic dermatitis to the silvery scales of psoriasis, the discomfort of allergies, and the fiery torment of shingles.
Fairness creams, which are a combination of the steroid with this hydroquinone, which leads to not only thinning of your skin, but an ashy kind of dermatosis, which gives you this grey skin look. And by the time they come to you, the damage is actually to such an extent that it's almost impossible to repair it completely.
Psoriasis is a chronic inflammatory disease and it's more than painful. I think it's an uncomfortable disease. Sometimes it's not treated adequately, and it's important that in all cases, first of all, you must have a dermatologist.
This is India's election headquarters,
As the verdict emerges, the markets will react.
bringing market movements into sharper focus with the most authoritative insights.
Once the exit polls were out, we saw the Sensex going up by 2,500 points.
In this pessimistic environment, there is a lot positive also. Please don't underestimate the 8% momentum in the economy.
Exploring election breakthroughs from the newsroom to the field.
The numbers have changed significantly in the last few minutes, even as far as UP is concerned.
Things not
interesting.
Welcome back. You're watching us here on Halftime Report, and like we pointed out, the markets have seen a big recovery from the lows of today. Nifty is up 140 points. Was barely in the green, now just about around the flat line. The Nifty Bank is doing a lot better. What's interesting is that today's low on the Nifty is something that we will keep an eye out on, 23412. The street was hoping for some support coming in at 23,400 to 23,450, and the recovery has been from that zone itself, led by the Nifty Bank. And it's the Nifty Bank which has been led higher by HDFC Bank and some other private sector banks. So that's as a result of which, good news for the market. The only couple of things we need to keep an eye out on, the India VIX, that is spiking as well. So for the last couple of trading sessions, even as the market was moving higher, we saw the VIX move higher. So that is something that tells you that we may face congestion around that 23,600 for the Nifty itself. And the Nifty active options tell you that as well. On the way up, we have the 23,500 call, which is extremely active for a premium of 123 rupees, telling you, levels upwards of 23,600, 23,625 may see some sort of congestion. At the lower end of things, though, 23,500 put with a premium of 50 rupees, telling you 23,450 is a strong support for the frontline index. It is a Wednesday, which means it's Nifty Bank weekly options expiry. 51,000 is a mark that everyone's eyeing. 51,000 put, equally active, telling you that that would be a strong support for the index. And on the way up, the 51,500 call writers are equally active, telling you that if there is an up move on the Nifty Bank, it may perhaps for today not extend beyond 51,500 itself. So roughly around 51,200, 51,300 is where we see the Nifty Bank sustaining. Indus Tower and Chambal Fertilizers are two stocks that I'm watching out for, which may enter F&O ban with the kind of open interest jump that we've seen. Indus Towers, we'll have to see whether that open interest jump subsides or not towards the end of trade, if it was taken just for the block trade.
Okay, all right, Manglam. Thanks very much for that. So that's the entire F&O setup. But let's, in fact, get in some market perspective. Earlier today, we did speak to Manish Santalia of MK Investment Managers. Listen in to his view on the market going ahead, as well as those key budget expectations. Listen in.
Overall, I think the direction remains positive. Only thing to watch out for is that for the next 6 months point of view on a fundamental valuation basis, the Nifty 50 looks to traject another 5 to 6% or 5 to 7% at this for the next 6 months. So the main action is going to be in certain sectors, the broader markets as a whole. I'm not talking about the extreme small caps or the micro caps, but yeah, the mid caps and the largest mid caps or relatively, decent market cap mid caps are the areas where the action was likely to be. I think direction remains positive. Overall, I would say that in terms of the IT space, we would reckon that the second half of this year or the first half of next year, clearly there should be some sort of pickup in the IT space in India. Plus now they're actually converting a lot of their operational creditors dues into equity. So I think tariff hikes clearly is the need of the hour. We have had it too good for too long. It's around the corner, and all the three players must act in sync. But anything like 10 times EV to EBITDA on FY26 numbers, you'll have some reasonable upside even from these levels. Of course, in the budget, the thing to watch out for would be how much of the money is left in the hands of the average households. So consumer durables, and consumption and consumer discretionary side of things, whether it be your two-wheelers or whether it be your health, pharma, and all of these things will see some sort of, extra attention than what these sectors have got so far.
Okay, so that's the opinion coming in on the markets. We need to take a short break on that note. But up next, a lot more lined up. In fact, we'll connect with Abneesh Roy, who's the Executive Director at Nuvama Institutional Equities, to talk about the entire FMCG space. Stay tuned.
For the ruling regime at this juncture.
Of course, things are changing, but it looks like a formidable victory at this point in time as far as the NDA is concerned.
Harnessing the power of over 25 years of world-class business news journalism.
You're getting all of this analysis live from the CNBC-TV18 election headquarters.
CNBC-TV18 emerged as the clear leader on television and YouTube on election counting day.
What does it take to build India's largest startup